why it's really important to have a plan and understand what your goals are.
In fact, my camel out there is suffering right now with a broken back.
So I actually found Pepe when it was only a couple of hours old, and I'm like, oh, this is a funny meme.
Oh my god.
Yo! Who is this degen?
The old man is swing trading over years at a time. And it's like, that's where the real money is made.
The answer is a permanent loss. With single-sided staking, you don't have to worry about impermanent loss.
When really, at the end of the day, it's just the matter of a macro market. It's just what happens.
If you're aware, if you're disciplined, you can hone that into further financial growth.
Financial freedom, so we can actually live life and not have to be constantly living paycheck to paycheck. I mean, that's the ultimate goal, more or less, right?
Good evening, ladies and gentlemen, and D-gentlemen of all ages. Welcome back to the Degen Roundtable for our Sunday flagship news show. I am your host, Zenith. I'm a bit of a legal and government analyst over here, and I'm joined by my excellent co-host, Mr. will.stevenson.iii. He climbs towers, knocks them down, cuts them into little pieces, and uses a lot of fire extinguishers in the process, I hear. How you doing, buddy?
Bro, I'm doing good. Life is fantastic. Thank you for that's a good I'm gonna have to use I'm gonna have to chop that up and use that as my own little introduction intro. That's fucking great. I'm doing awesome, bro. I'm out here in Waxahachie, Texas, just south of Dallas. GTR festival, or I can't remember what the hell it's actually like legitimately called, but it's a GTR race course. I'm out here like at the track. I am parked right in front of the racetrack. Like there's all the stadium and stands and everything. We just finished for the night. Everything's all packed. I'm out here with Magnus Motorsports, helping represent the Magnus family. And I didn't do any selling or any vending today, but it's been awesome. Nothing but cars driving fast, people spending boatloads of money, and delicious barbecue and stuff happening. So I'm out here hanging with the boys, having a good time. What about you, man? What are you up to? What's new and exciting with you?
I have been playing a good bit of golf. Got 36 holes in over the last 2 days, and I got to get the last bit of good weather I can while it's still there. I am in New Mexico. We're coming up on the old cold season, but this weekend it was like 75 and sunny yesterday, and I'm like 55-ish today. So, hey, it was a fantastic time. And besides, hanging out with friends, hitting balls, having a beer or two, what's not to love?
Hell yeah, man. I've actually got some beer myself. I'm drinking some garage beers with the fucking top off. I've got the Magnus Motorsports branded draft top can lid remover with me right here. So fucking, you can't get them from Magnus. You have to get them on Amazon, but you can get a Magnus Motorsports sticker and put it on the bitch, and then have all your beers topless. But that's fucking kick-ass, dude. There's nothing quite so fun as crushing a bunch of brewskis and smacking some golf balls around on the green. So that's awesome. Did you do well, or were you playing for fun?
Just playing for fun, but like overall shooting pretty good. I'm averaging like low 90s these days. Every once in a while, hit into the high 80s.
Okay.
So I've been playing for 19 years at this point. I still wouldn't call myself like a great golfer. Would I consider myself competent to maybe like kind of good? Yeah, I'd go that far. But it's always just a good time getting out there and playing. And when you hit those good shots, it just it's money. It just feels so good. Yeah.
Hell yeah, dude.
I will say this weekend, I've never gotten a legit eagle before. That means that you get 2 under on a hole, because whatever par is, getting a 1 under is a birdie, 2 under is an eagle. I had like 4 eagle chances and I blew all of them, and each one was equally brutal and painful, but one day we'll get there, just not quite yet.
Hell yeah, dude. For the folks at home who don't know what any of these words mean, and that's a hint, it's me. I don't know what these words mean. What does eagle? What is oh, I've done the wrong thing. There we go. Back to normal. What does eagle mean? What does birdie? What is all this stuff? I know that par means you hit the number of holes that you're supposed to, right?
Par is the number of strokes it takes for a pretty good golfer. What's called a scratch golfer. They're pretty much like the top 10 percentile of all golfers out there. And then if you get a birdie, it means you hit 1 below that. And if you get an eagle, it's 1 below that. And if you're on a par 5 and you hit 3 under, it's called an albatross.
Those are albatross.
Yeah, those are very rare. Pretty much you're on like a hole that's like 550 yards and you crank a drive like 300 and then you hit a really good like hybrid or fairway wood shot the other 250 and then just get super lucky and it goes in off that. But those are
I need to get it.
rare.
I love albatrosses, man. I got to get an albatross tattoo at some point. That's I'm glad that you said that bird's name because it reminds me that that's something on my to-do list.
Yeah, it's the old sailor's parable there of don't kill the albatross or you shall be cursed.
Bro, that's what Rhyme of the Ancient Mariner, I think. I know
That's
Iron Maiden.
It's their Rhyme of the Ancient Mariner.
Yep. It's a poem from long ago, but Iron Maiden did a song cover of it and it's really good. It's one of my favorite bass lines that I can play is the Rhyme of the Ancient Mariner bass line. It's a good time. Very good.
It's very good.
So tattoos and golf and racing and stuff. Speaking of golf, we got a comment from one of the folks in the chat. Is it time, Mr. Zenith, for chat motherfucking shoutouts upside down style? I guess we could do it. We could do chat shoutouts right side up style, couldn't we? That would probably be better.
There you go. That works better. Yeah. Yeah, the comment you're putting in there. It is also from our first DGen of the evening. That is none other than our boy 54 himself. He says, "What is up, DGens?" And he said he had a blast at the PLS 369 conference, hitting some balls with us. That's right. Centurion was on our golf foursome team out there for the golf tournament. That was an absolute blast. And by the way, if you want to get drunk in Vegas for cheap, go play the golf tournament because everybody had a booth set up and everyone was like, yeah, you guys like shots? And it's like, oh my God, one of us has to drive home.
Bro, I was so fucking plastered by the end of that golf. So our golf team was myself. It was Zenith. It was Zenith's girlfriend. And then it was also Mr. Kenturian 54X, who was my fantastic roommate for the duration of the Pulse Chain 369 tour over in Vegas. Man, that was such a fun fucking time. That was so cool. We met Triplet Dad. We hung out with Vets in Crypto. We went to all the different crazy ass booths. Nate and Mrs. McGettit were manning the DGen Roundtable booth, I think, or something like that. But yeah, it was so fucking cool. It was so awesome. I absolutely loved it. Oh no, they were manning the oh shoot, the RG3 and SJ's booth, I want to say.
Yes. Yeah, that's right.
Yeah. We were assisting. The DGen Roundtable did a lot of assisting in that Pulse Chain 369 tour. That was a lot of fun. Do we still have the I think we still have the media asset. I don't know if I deleted it. Oh, we do have Zenith, your advertisement for the Pulse Chain 369 tour. Bro, it's almost that time again. It's almost time to start advertising for the Pulse Chain 369 tour. So it's a good thing we've not removed that. But back to the chat shoutouts, broski. Fucking shout out to Kenturian. He was a fantastic addition to our team, and I think that he made up for all of the shitty hits that I was doing. I know I got one or two good hits in there, but we played 18 holes, something like that.
Yeah, we did. It was a blast. I love that tournament so much. I'm looking forward to it every year.
It was fun.
Alrighty, up next, we got good buddy of ours, Hexskin Lost in Asia. He says, Peter Schiff is now the same role of losers who fund their own bags in their ecosystem right now. Yeah. Good old Uncle Schiff, the gold connoisseur there. It's odd what he's doing there, but yes, you have hit on our headline story of the evening, which is that there is a crypto conference coming up over in Dubai in December. And well, Peter Schiff is calling people out. He's challenged CZ, and now he's challenged Michael Saylor to debates. So we'll be talking about that story in just a second. But yes, he's doing odd stuff. But again, you are correct. He has at least $1 of his portfolio in Bitcoin, I would imagine. Everyone has money. Everyone with money has some Bitcoin to a degree. Up next, we got Marcus672. He says, what up, all? Will catch ya on the replay. Got too many games going. I hear you. Shout out to all you guys in the replay gang. We really appreciate everybody showing up whenever they do. And there's absolutely no pressure to catch us live. But if you want to hang out and ask questions and get it on the chats, you got to do it live. But either way, shout out to you guys in the replay gang. Love seeing all the comments that we get on those ones. And last but not least, Smooth Brain, aka Mr. Boomstick, he's coming in here. He says, Maiden is a classic. Thanks for the streams, gents. You are absolutely welcome. And yes, Iron Maiden. That is some good classic music right there for sure. Gosh, that reminds me of in the second Star Trek movie, the more recent ones that they made a joke, or it was the third one actually. Yeah, they made a joke where they played Sabotage by the Beastie Boys, and then Spock looks at Kirk and he goes, is this classical music? Because in the future, I guess classic rock is classical. I guess that's more of like punk, whatever you want to call it.
Classic music. Hell yeah.
Yeah.
I do love Iron Maiden. The thing about Iron Maiden, the only thing I don't like is like you listen to one of their songs, you've basically listened to all of Iron Maiden's songs, which is like they
Little
all
bit.
have the same sound, which is okay. It's perfectly fine if you like Iron Maiden, which I very much do. Then there you go.
I am a big AC/DC fan myself, and the thing that I like the most about AC/DC is they just have like a good like sound to them. Like they have a consistent kind of like way that they sound. And it's like that the British guy with a very raspy voice, and it just kind of goes like hard with it. And then also the guitar riffs and just the melodies that they make are also just pretty banging too. But they also have faced some similar criticism, which is a lot of the songs sound somewhat similar, but at the same time, it's like I'm here for all of it, so I don't care. All right. 54 Cent, come back at us. He says the Peter Schiff RH debate was hilarious. Didn't Schiff say he only has like 5% of his portfolio in gold? I will admit, I did not catch that one myself, but I heard a lot of people say really good things about it. But look, I would not be surprised if Peter Schiff only has 5% of his portfolio in gold. I think that one of the other stories we're going to be talking about right now is kind of what's going on with the overall markets, not just the crypto markets, but the macro markets as well. And people are saying there's a bit of a liquidity shortage. And profit taking going on. So it sounds like people might be shifting more towards a cash reserve kind of a atmosphere going on, hoping to maybe find some better prices to get in at, but that's neither here nor there. One more sneaking in here. I see you, Josh, Mr. Slide 180 with the cheers. Good to see you, sir. Always a pleasure. All right. Well, let's not bury the lead any further.
Before we go too far into it, Zenith, I would like to give the folks at home an opportunity to win some motherfucking free Degen Roundtable stickers while you have been over there doing fantastic chat shoutouts and things. I've been adjusting one of the banners to be ready for a sticker motherfucking giveaway, ladies and germs. I've got a shit ton of Degen Roundtable stickers, and you get one of these for free if all you do is type into the comments. I've just changed the scrolling Chiron banner at the bottom. If you type in DRT, then you get this sticker for free. All you got to do is send me a oh shoot, man, this touchscreen is
does it have to be a
my
hashtag?
ass here. No, it doesn't have to be a hashtag. I have changed it. So type in, oh man, why is it still editing? I don't want to edit it anymore. Click the save button. There we go. All right. So if you type in DRT in the chats, then you get one of these stickers for free if you send me a mailing address. All I need is a mailing address. So write me a DM. It says down at the bottom, DM Will Stevenson at t.me/Will Stevenson on Telegram, right? And you get one of these stickers for free if you just type in DRT into the chats. But if you win the sticker giveaway, then not only do you get the Degen Roundtable sticker, you also get, that's also DRT stickers. I just recently collected all my sticker packs. You also get chat motherfucking shout out stickers, baby. So you can get Degen Roundtable sticker for just participating, right? And send me an address. But if you win the giveaway, which we're going to do at some point in the show, we'll only do one of them. You get some free chat shout out stickers. You also get a free A Few Good Hexagon stickers, which is a sticker of myself and Zenith. Let me pull one out of the package here so I can show it to you better, so the glossy plastic isn't shining over everything. But you also get a free Few Good Hexagon stickers. There we go. And it's from our episode where Zenith, myself, and a wild SJ read off the court transcript. I had these turned into stickers. So you get chat shout out stickers. You get A Few Good Hexagon stickers, which is shouting out Degen Roundtable. And I've also got some hex.com stickers of various varieties. So the one winner tonight will get some hex.com stickers. They'll get a couple chat shout out stickers, and you'll get a couple Degen Roundtable stickers. Everybody that participates is a winner. You'll get at least one Degen Roundtable sticker. But if you win the sticker giveaway, then you get multiple stickers. So in the comments, just type in the letters DRT, and you will be in the qualifying drawing to get a bunch of regular cool stickers. So everybody wins if you participate, but the winner of the whole giveaway gets multiple stickers. By the way, you can type it in multiple places. If you go to our YouTube and type it in, and if you go to x.com, you can also type it into the live chats over there, and you'll get 2 entries into the StreamYard giveaway. So we're gonna give away some stickers today. It's gonna be fun. It's gonna be awesome. I finally made it back to where my sticker stash is, so I've got all the stuff. So type in DRT into the chats. You don't have to put a hashtag. You don't have to do anything. If you just type in the letters DRT and you send me on Telegram, you send me some sort of address. You could send me your address, your mom's address, the address to the president of the United States. I don't care what address you send it to. If you type in DRT and you send me an address, I'll send you a motherfucking sticker. So there you guys go. And the winner will get a whole bunch of stickers. So that is going to be the giveaway for tonight. You guys can hang out and have fun. Those of you that are watching us live, you guys get extra opportunity. So that's all I've got, Mr. Zenith. Let's whenever you're ready, I'm fucking cleared hot, and we can hop on over into the news story for tonight and see what's going on.
Do it. Alrighty. Up first, we got the big one. Peter Schiff calls MicroStrategy's model fraud and challenges Saylor to a debate. Yes, CZ has also challenged Binance founders CZ to a debate, and a plan to take place in December over in the UAE. So, Golden Master Peter Schiff stated that the strategy company is using fraud as a business model on Sunday and challenged their founder to debate. Schiff, who is one of crypto and Bitcoin's harshest critic and a staunch gold advocate, challenged Saylor to a debate at Binance Blockchain Week in Dubai. Here's the post that we got from Peter Schiff. Strategy's entire business model is fraud. Saylor and I will both be speaking at Binance Blockchain Week in Dubai in early December. I challenge Saylor to debate this proposition with me, regardless of what happens to Bitcoin. I believe MicroStrategies will eventually go bankrupt. Let's go. All right. That is a hell of a statement to issue there.
It's kind of a hell of a statement, but also like MicroStrategy's MNAV is below 1, isn't it, right now? Like that's it's not too crazy of a thing to say, right?
I don't think so. But the big thing here that they're talking about is that Schiff believes that pretty much there's going to come a point where MicroStrategies can't issue any more debt, and it's going to spark their death spiral. Pretty much, if Bitcoin crashes enough and Saylor's not able to raise any more capital, it means that everything they're already sitting on might go in the red. But to be honest with you, their average buy price is still like I'm pretty sure it's sub $90,000. So even based on that, Michael Saylor is not planning to sell anytime soon. I don't even think he's thinking to plant. I don't even think he's planning to sell in the next 20 years. If anything, the guy is saying like this is forever money. That we are just stacking onto this. We are buying it cheap, stacking it deep, and we're just gonna sit on it, and then maybe take some loans out against it or something like that in order to buy more Bitcoin. But overall, what do you think? This is a hefty accusation to lob there, saying that their business model is fraud. What is fraud about it? I think he's pretty clear, which is like, we buy Bitcoin. That's it.
I mean, they're doing the exact thing that they're saying that they're doing. It's very similar. Like Michael Saylor has talked about this strategy multiple times anyways. This is essentially what New York real estate does, is they buy a building, they increase the value of the building, they borrow against the increased value of the building, and then they go and buy more buildings. So it's like, it is all a big Ponzi scheme, but it's a Ponzi scheme that sort of kind of works. So like, as long as the game keeps playing, as long as the stuff keeps going, then I don't know. We'll see. We haven't got to the point where this shit all belly flops under.
Definitely.
And it all goes to shit like what Schiff is talking about. But it will be interesting.
Yeah, I think it's a pretty big ask to say something like it's a fraud and it's all going to go belly up eventually and they're going to hit a death spiral. They've been doing this strategy for a while now, and it's been working and not really showing any cracks. So there'd have to be some other thing that gets thrown into the mix, in my opinion, to really see the effect that he's talking about here. And at the same time, I feel like saying something is a fraud, but then they're doing exactly what they're saying. That's not fraud, as we learned back when Hex went in front of the SEC, because the Judge Amon Carroll, even asked that, like, how is it fraud to do what you say you're going to do? And the answer is it's not.
Yep.
The only possible thing I guess you could maybe say is fraud is like, oh, they're trying to defraud their customers by claiming they're doing this stuff. And it's like, well, I mean,
as long as they're able to.
Yeah, exactly. This, I guess, if you want to argue that the second they're unable to buy more Bitcoin as a Bitcoin buying company that people want to invest in, there's a case there, but I think it's super, super flimsy personally. So, look, is this bloviating? Is this puffing up the chest? Is it poking the other guy in the chest to try to get him to come stand at the debate stage? I would argue, yes, it is. Am I here for it? Also, yeah. Like, let's see the guys debate. Come on, we want to have the good stuff going. So let's make it happen.
I do think it would be quite amusing to see them talking about, especially at a Binance what it's not Binance Festival. What was the name of it again? Hang on.
Binance Conference.
Binance Conference. Okay.
Binance Blockchain Week. Excuse me.
Binance Blockchain Week. Okay.
Yeah, but Hexagon Lost in Asia actually is a good answer for the question you asked earlier. It says, yes, Will is correct. The negative MNAV means people who bought MicroStrategies in 24 and 25 to get Bitcoin exposure are paying $390,000 per Bitcoin.
Oof.
Oh.
Yep.
For the folks at home that might not know what MNAV is, aka me, what do you guys? What is this acronym?
So MNAV basically means like the price to buy the stock versus the price to buy the asset. So you remember when Grayscale was buying Bitcoin,
yes,
and people were buying Grayscale stock. There was a point in time where it was cheaper to buy Grayscale stock to own a Bitcoin than it was to buy an actual Bitcoin. And then it flipped at some point, and it was more expensive to buy Grayscale stock than it was to buy Bitcoin. This was known as the Grayscale premium in the last cycle. And so essentially, when the price to buy the stock is cheaper than the price to buy the asset, then that means you have a negative MNAV, and that means that like, why would anyone buy the asset when they can just buy your stock in it? If the MNAV is above the price of the stock, then that means that they believe in your business model. And I don't know why anyone would buy the stock when you could buy the asset when the MNAV is positive. But it basically means like the company value is higher than the asset when the MNAV is positive. And when the MNAV is negative, when the MNAV is below 1, then that, like, my peanut brain understands. Sami talks about this all the time. So if you guys want like more thorough information on MNAV, then go and watch your friend Sami, because he's much more eloquent and knowledgeable speaking about it than I am. But it's essentially just like, if all the company does is buy the thing, and it's cheaper to buy the company stock than it is to buy the thing, then that means that the company balance is negative. That means that the company's value is less than the value of the asset, which you want the value of the asset to be more than the value of the company, from an investor perspective. So that's it. There's two things at play here. There's the price of the asset, which will go up and down, right? And then there's the price of the company stock. And so if you believe in the company, and the company is buying a thing that is worth less than the company is, and it's like, that's generally a bearish that's a bearish type. I don't know if signal is the right word, but it's a bearish type action. So
that makes sense.
If it's cheaper to buy Bitcoin, and you have sovereignty when you buy Bitcoin, and there's way more better reasons to buy Bitcoin than there is to buy MicroStrategy, then like that's like you would buy the MicroStrategy stock when it's under the price of Bitcoin when you believe in MicroStrategy more than you believe in Bitcoin. So
okay.
Yeah, that's the general peanut brain explanation as best I can give it.
I like it. It makes sense to me. And yes, by the way, hello, just live, and thank you. Yeah, MNAV is net asset value. Some people may not even know the acronym. Well, I didn't. Now I do. Thank you very much. Any final thoughts on the, like, do you think it's worthwhile to be calling out people like this on Twitter in order to get these debates going, or is there alternative ways of doing this that might be more effective?
It's not worth it for me, but it's worth it for everyone else in the process. It's worth it for Michael Saylor. It's worth it for Peter Schiff. It's worth it for MicroStrategy, and it's worth it for Bitcoin. Like, I personally wouldn't trade my reputation for those type of things, because it's just not something that I'm interested in. But all of these guys doing this shit, it drums up attention value. Like, look at us right now. We're doing free marketing, free advertising for all these assholes, right? We're doing advertising for the Bitcoin guys. We're doing advertising for Peter Schiff. We're doing advertising for MicroStrategy and advertising for Michael Saylor. So everyone's getting like attention value out of us talking about it. So because they're out there causing drama and causing, you know, indignance and whatever the hell, then they get free eyeballs on their product. It's the same thing as like if you really don't like something, you don't talk about it at all. You just let it die and you let it exist. It's the thing from Sci-Fi, the risk diode,
risk
Richard
diode,
Hart.
Yeah.
Yep.
Classic.
Yep, exactly.
I was gonna say it's either that or you could take a page out of 48 Laws of Power, which is court attention at all costs. So
Yep.
it's one way to do it. I mean, I think using the word, I know we're getting nitpicky here, but like I think using the word fraud is a very serious allegation, especially in the business world when it's business people throwing it around at each other. There's some implications that can come with that potentially legally. But at the same time, though, when it comes to just trying to like gin things up and like really like, you know, like get the hype up the fight and like get the debate, the big boxing poster that we made for the thumbnail, that kind of stuff, it works to a degree. There's a reason that the UFC and boxing does all those giant press conferences like 6 months ahead of the fight, just to, like on a world tour, just to get people interested and see the guys like jabbing at each other with their jaws instead of their fists just yet. So look,
nobody would care about Conor McGregor if he didn't talk shit as much as he does. You know, like if he was just humble and he never did anything but fight and win, like it's like, cool, good job. Excellent. Like think about how much attention was drummed up by the Mike Tyson versus Jake Paul fight, you know? And then Mike Tyson fucking threw the fight and Jake Paul won against the greatest heavyweight boxer in the world, right?
Don't remind me. That was painful.
It was a fucking money grab. It was a scam. Like my personal 2 cents, my thoughts are that Mike Tyson purposefully threw the fight because he was paid to. You know, but I don't have any evidence to back it up other than the fact that I've seen Mike Tyson fight better, and I don't know a goddamn thing about fighting. And I know that Jake Paul is a fucking loudmouth asshole talking like what would you call it? Like cabal propped up kid who just basically is just a money making and
hype machine.
Talking machine. He's a hype machine, right? And you know, fucking hats off to him. Here I am talking about it because he's out there. Like you don't think about all these fighters. Like people know about Rod Tang, or I think his name is Rod Tang, the MM or the Muay Thai guy that is just super humble. It just kicks people's asses. All he does is kick people's asses. He never talks shit. He's very respectful, but nowhere near the number of people know about him that know about Jake Paul, that know about who's the other one? Conor McGregor, right?
The notorious.
If you don't inject drama into it, then less people know about it, less people talk about it. You know, like when it's just a regular ass fight and there's no indignance, there's no like emotion in it, then it's just like, oh, these people are hitting each other and there's no like that's why WWE is so popular. It's so much more popular than regular fighting, and it makes so much more money. Is because it's all just a big Shakespearean play. So court attention at all costs, abso-fucking-lutely right.
That's fair. I mean, yeah. I still think that like for those guys, there's a good degree of do they talk a lot of shit? Yes, but at the same time, they absolutely back it up. That's why I remember, gosh, the Jake Paul Mike Tyson fight was just such a letdown. I happen to think it's also because, you know, Mike Tyson's getting pretty old, so it's part of it. But at the same time,
pulling his punches, man. He was pulling his punches.
I know it. You can absolutely point it out. We all saw it. There were a few moments there where he looked like he was coming alive in the first minute of a round, and it was like, oh, this guy might be in trouble actually, but nobody was ever in trouble. Let's be real here.
Yeah.
And hats off to those guys. They made a crap ton of money, so shout out to them. Yep. Alrighty. Any final thoughts on this one? If you were going to pit these two together, what would you want them to debate?
I would just want them to drum up attention, man. I just want to see them like, you know, like just cause indignance, like do something. It's like, you know, the kid with the stick poking the thing on the ground. It's like, come on, do something, right? There's not a lot of shit happening in the Bitcoin world. There's not a lot of shit happening in the investment world of like gold and Peter Schiff. Like I haven't even thought about Peter Schiff since I got the book that his dad wrote about like taxation being a fucking horrible thing. So
that's true.
What about you?
I would love to see them debate the the validity of the markets that they're involved in. Like, I'd love to see them talk about what's going on with the gold market and what's going on with the Bitcoin market, and try to get to the bottom of like why things are going on and which one is arguably looking a little bit better right now. I got to say, I think Michael Saylor is an excellent orator. I've watched him on a lot of different podcasts and stuff. The guy is able to go on like very long speeches and talks, like explaining points, but the entire time, he makes everything clear. He keeps you with him the entire time. You're not getting lost. You're not getting bored and stuff. So I would love to see this, because I think that he does a very good job of just like getting on the mic. He's great at it. And whether it's just doing the quick hits, talking about we're buying more Bitcoin, or doing the 45-minute explanation to a non-crypto person of like, okay, what is Bitcoin? Why is it so important? And why is it fundamentally different than everything else? Like, he's good on both. And I really like that.
Yep.
For sure.
I agree. Michael, I love the way he says Bitcoin without pronouncing the T. Bitcoin, or I can't do it.
Bitcoin.
Bitcoin.
It's like the guttural stop on it instead of the letter.
Yeah.
All right. Yeah. Let's see. We got Moondog coming in here as well. He says, theory. People buying MicroStrategy are buying into Michael Saylor as much as they are into Bitcoin. E.g., they trust him not to lose their coins or money more themselves. Some people treat Richard Hart similarly. I think you're spot on there. Definitely both assessments, by the way. I can see that Michael Saylor is definitely a very charismatic leader, and he looks like he's building a good track record to show that he knows what he's doing and that he's a pretty safe bet. I mean, considering so many other people are trying to like copy his strategy and become the Michael Saylor of Ethereum. So, I mean, shout out to those guys on their arms race of trying to buy up a certain amount of supply, because he pumps all of our bags. But yeah, Richard Hart, I think, is something similar as well. It's not possible to buy into Richard Hart as much, I think, because Michael Saylor just has the strategy company, which you can do. But Richard Hart just has like the tokens, which it's not really buying into Richard Hart. It's buying a product that he created. So I think it's a little harder to do, but the sentiment, I'm right there with you. I see the sentiment for sure as well.
Yeah. I think people have the same sort of mental expectation when they buy into Richard Hart as folks would buying into MicroStrategy or buying into Bitcoin or whatever the hell, you know.
Yeah, that makes sense. Alrighty. Tell you what, that's enough of that one. We've had some action in the markets this week. Do you happen to know what the current price of Bitcoin is, by the way?
It's like in the 90s or something. Let me
95.
go over. Yep, I was about to say I saw it at 96. By the way, guys, if you go to t.me/BTC_tick, then it gives you an alert on every $1,000 move in Bitcoin. And I do remember seeing the 94 and then the 96, and we're currently sitting at 95. So that's good, I suppose.
Good. How would you put that? Because we've had some action in the market going on, namely action towards the downside. So,
bro, I would say it's good no matter what the price is. I would say that if the price is low, it's good because you can buy. If the price is high, it's good because you can sell. No, but good or bad, it's all up here, man. Nothing is intrinsically good. Nothing is intrinsically bad of its own accord. It's only such a way because we think it to be so. Like if I have a glass of water and I live in a swimming pool my whole life, I won't care about the glass of water. It'll be bad. But if I have a glass of water and I just came out of the desert for 3 weeks, then I'm going to think that glass of water is very good. I'm going to care about it a whole lot. Value is totally subjective. It's all inside of our mind. So if you decide that no matter what the price is of a thing that you like how you can like it, then you've basically conquered the world, you've conquered the market. And it has to be a thing that other people also decide is good or also decide is bad as well.
That's fair.
Because
it
has to have
good
the
perspective.
fluctuation. Yeah,
I like that. But I'll say this much: we've been on a downtrend. How about that?
Yeah,
previously we hit
good for buying,
depending on what your strategy is. But yes, so October 6th, we had the all-time high, 126,000. Then we had the single greatest liquidation event possible. Then we had U.S.-China trade relations. Then we had another breakdown and more liquidations. And then now we are breaking down below 100,000 pretty substantially. We even stopped right at that 98K level, and then went all the way down to our low of about 93,000. Tested that support area, which matches up with this little chunk that we had back in May after the recovery from that tariff dip. But this is, I think that the market is feeling very shaken on this one because the $100,000 level is a very big psychological level, and it also coincides with the time period we're in right now, which is that if you follow the 4-year cycle, it means that this theoretically should be the top. Like literally last week, 6 days ago, was the actual 4-year point from the last top itself. So it's this kind of action that in the current market that I think does really scare some folks. And if we even flip over to the old crypto fear and greed index, we're currently at 14.
Oh,
yeah. We hit
what was
10 yesterday and the day before as well.
What was it Agent J says about the fear and greed going below 20? That's something to pay attention to, guys. Now, I don't know if that necessarily means buy, but historically speaking, when the fear and greed index goes below 20, if you can sit and wait for a bit, it has a better result. So I'm not like, I don't know what your guys' time frame is. I don't know what my own time frame is. I've made a whole bunch of bad mistakes, but like, if you're looking for an indicator, then like this is one of them. And if you can stomach the price going lower and continuing to buy, then you might be pretty happy if the price goes higher later when the fear and greed index shoots back up to 60 or shoots back up to 70. So like depending on what your time frame is and what your asset class is, like the fear and greed index, it will be a good indicator until it stops.
That's true. You hit the point right on the head there, which is that there have been multiple studies and analyses run looking at the fear and greed index indicator. There are two critical areas on the upside and downside for each. Pretty much anytime you get above 80 and then anytime you get above 90 as well. And then conversely, anytime you get below 20 and anytime you hit 10. And we hit 10. That is a very substantial indicator because getting that low is something that really doesn't happen that often. The only other time that we hit 10 was back in 27th of February, 2025. So that is back when we were doing all of the old tariff negotiation stuff. So 27th of February, that is you right here. That is this big wick that went below the 200-day moving average for the first time. That was when we hit $78,000 Bitcoin after having an all-time high at 108,000. So that is the only other time we got down this low. That was a correction of, let me see, from there to there. That was a 28% correction, down $30,000. What are we looking at here? Well, we're looking at something smaller than that, actually. We're looking at 26% and down $34,000. So pretty comparable in size, but definitely not bigger than the last one. But it is interesting to note that, yes, the crypto fear and greed index, this is something that you really don't see that often, maybe once a year or maybe like once or twice every 4 years, that kind of stuff. This is a substantial thing to pay attention to if you care about this indicator and you want to build a strategy around it. So like you said, if you're in the position where your strategy is looking to take advantage of this kind of opportunity, then this could be a thing that you've been waiting for a while. And the studies have shown that anytime it gets below 10, it's a pretty good buy opportunity. Granted, nothing we say here is financial advice. You got to make the decision on your own at the end of the day. But at the same time, we dropped down below 100K, big psychological level, big resistance was built up there after we were at all-time highs at 126,000. So if you're thinking to yourself, what are the odds that we make a new all-time high again, or we even get close to some of those other levels? That's a pretty decent sized move towards the upside. So it's definitely something to be looking at for sure on the markets. But anyways, back to the charts. All right, so let's see what Uncle Z's crystal ball has for us here. Well, first, let's look at what's going on in the RSI. RSI is a relative strength indicator, similar to the fear and greed index, but this one takes other indicators into consideration. But right now, we are technically not in the oversold territory like we were back in February, the last time the fear and greed index got down to 10. If you look at the overall structure, though, what's going on is that we are making lower lows as we progress further on. The first one was made after the liquidation event and then also during the China negotiations. Second one was made on the 3rd of November after we had the bit of the market structure correct downside. And now we have our third one, which is sitting right at 30 there after we have what's going on now. What's interesting to note is that there really aren't that many big news stories coming about that were moving the markets. If anything, it kind of, in my opinion, looks like an aggregation of everything else going on. We have low liquidity in the markets. We have some macroeconomic fears going on. We also have lowering odds of actually getting a rate cut in December. If you look at the predicting markets and the betting markets, it's actually dropped below 50% for the first time looking at that Fed rate cut. So overall, it's not a single big news story, but it's just kind of a lot of stuff piling up on top of each other that's given people the bit of fear and taking them away from what I thought would be a really good time for a risk-on environment. But at the same time, though, it depends on how we react out of this and what the next moves are effectively. Are you hearing anything else, or does that pretty much sum up what we've been seeing in the news feeds?
I would say that probably pretty well sums it up. I've also been pretty ignorant to the news feed, so
hear me out. I don't think there's anything too wrong with trying to ignore the news a lot, because there's a lot of noise, sometimes very minimal signal, just a lot of noise. All right, let's get into some of the technical stuff. So let's look at our moving averages. Moving averages are going to be our blue, teal, and purple lines here. This is our 20, 50, and 200-day moving average. 20-day moving average currently sitting at 103. Definitely on a steep downside. 50-day just dropped below the 200-day moving average. So that is also on a down curve, and that's at about 109,000. And our 200-day moving average right at 110,000 as well. So those are our short, medium, and long-term indicators of momentum. And that's pretty much what we got there. I want the weekly. That's what I want. All right. Here's the first piece of real bad news when it comes to, is the market over? Well, we had a significant drop, and we just had our weekly candle close. This darker blue line here, that is our 50-week moving average. We talked about this last week with Agent J, which is that if we get 2 consecutive closes below that 50-week moving average, odds are that's a good indicator that the bull market is over, or at least even the shorter term bull market is over. So there's candle 1. Now it's kind of up to this week to close above $102,800. Currently sitting at $94,000, $95,000 Bitcoin. That does seem like a bit of an ask, especially to get back there in 7 days effectively. So with that being said, on the way up, we're going to have to go contend with that $98,000, $100,000 level. And then even once we get above that, there is a bit of resistance, or what appears to be a support that is flipped to a resistance at 103,000. So that's why I say it's a tall order. We haven't had a whole lot of action towards the upside when it comes to good news macro events, and we're not going to have a real opportunity for something like that, such as the Federal Reserve deciding to cut rates in 1 week time span. We're looking at mid-December for that one, and as it stands right now, there's not a whole lot going on. And if anything, we're coming up to Thanksgiving pretty quick, meaning that, well, it's kind of that time of the year where November, December, not a whole lot gets done. But at the same time, I guess you could maybe try to hope for a Santa rally and say that traditionally at the end of the year, we see a lot of injection into businesses through Black Friday, travels, sales, all that kind of stuff. And that should help, buoy the market a little bit. But outside of that, and then maybe the possibility of the government shutdown ending and the federal government getting back to spending, because it is the biggest spender that this planet has ever seen before. That might help, but at this point, to be honest with you, I think that it's a tall order, and as it stands currently, the bears are in the control of the market. So, with that being said, is it possible that we go down lower? Yeah, it's always possible. After this, realistically, we're looking at right around that 89,000, 90K range, and then below that, we're looking probably down towards there's not even that much data below that either. Maybe that I could see an argument for the 83,000, 85. So your downside targets are 90 and 85. Upside targets we're looking at are 98 and 103. And then after that, we can start thinking about looking up towards 106. So, hey, for people expecting this to be the record-taking season, I thought it was going to be too. But the data that I'm looking at right now is not looking that great for upside potential, to be completely honest with you. But at the same time, because that fear and greed indicator is so low, the odds of having a dead cat bounce, if you will, or a slight recovery towards the upside because we dipped down so much, that does go up a bit, and that possibility exists there as well. But I'm just looking at there's a lot of resistance that we got to get through. Granted, it's somewhat minimal because it's just freshly made. It's not something that's been building up over time. But at the same time, the way it's going right now, indicators are not looking too great, to be honest with you.
Womp womp.
Yeah. All right. Mr. Moonpilled Rational Optics. He did hit me with give it to me straight, Z. Is Charlie winning the bet against GG? I thought he already won the bet, but please refresh me on what the bet was exactly. Because I thought the bet with DRT.333 from Charlie was that Bitcoin just had to be above like $100,000 before this cycle ended. And well, we've done that. We did it already back in December and January. So I think Charlie's looking pretty good. Oh. Will, any thoughts on the market? Any fine TA you want to break down for us?
My technical analysis is that drawing the squiggly lines on the charts, as Sami says, is a good way to help reinforce the position that you already have. Again, guys, it's all in your head. It's all in your head. There's real numbers printed out on the charts. The indicators and things, they're useful. They're good things to pay attention to, but it's just more data that you can use for your decision making. And all of your decisions buy down or roll down to one of two things: buying or selling. Holding is the same as buying, and like fudding is the same as selling. So it's like, are you going to buy or are you going to sell? You look at all of these data points and you come to one of the two conclusions of, am I going to buy? Am I going to sell? If the price to get out is lower than your price to get in, then you're locking in a loss. So as long as you don't lock in losses, then you haven't lost. That's my 2 cents. I don't have any like technical analysis. I try not to think about it too much, but that's my thoughts.
Look, you're not wrong. You have the age-old wisdom there of it's only a loss if you realize the loss. So
yep.
If you sell, you're locking it in. But at the same time, the potential downside of that is that if you keep going further, it means you're only going to be potentially looking at a bigger loss in the future if you choose to realize it. But ultimately, that's kind of the idea of round tripping, which is the loss is bad enough that you don't want to sell, so you're just going to wait for the entire next cycle to pick it back up and get above where you got in. But
yep.
Yeah. Alrighty, we do have a small request here. Mr. Centurion, he says, can you look at the 250-day moving average of this cycle versus the last 4-year cycle and how long we were below those before going back up? Yes, sir, I can. Alrighty, so currently in this one, we just had our 50 drop below our 200. Over here, we had our 50 drop below our 200 as well. Summer of 2024, we dropped the 50 below the 200 as well. And then after that, the only other time I think we had that was this small dip in September of 23, pretty much towards the end of the bear market. And for that, we get back to our other cycle, which is that, well, this actually paints a starker picture. So the blue line, this one here, that is our 50. The purple is our 200. So after we had the all-time highs in November of 2021, we dropped for about 2.5 months. So we get the 14th of January is where we drop below the 200. And this was our double top cycle, so remember that. So the other time we had that was in June of 21, after the high for then was in April of 21. So we had half of April, May, half of June effectively. So pretty much 2 months there, which is interesting when we compare it to this cycle. Because if we go over here, we drop below that average pretty quickly. And the reason for it is if you look at the structure, the 200-day moving average, we haven't been that high above it the whole time. So when we have this small correction, it's a lot easier for that moving average to drop down below it. Because our high was on the 6th of October, and it is currently the 16th of November. So it's a little bit more than a month, which is a lot faster than what happened previously. We want to look at earlier in the year. We had our high on the 20th of January, and then we had our cross the 6th of April. So this one was about 3 months pretty much. So that is much more along the timeline of what we saw back in 2021 for both of these tops, which is we got like 2.5-ish months before we go down there. And then once we went back down, unless it was the double top, we stayed under that the entire time, all the way until we got to the bottom of the bear market in February of 23. Because that's when we had the 50 cross above that 200-day moving average. Back to 2021, again, this purple line, that's the 200. This blue line, that's our 50. So COVID dip, drops below it. Then after that, it stays above it the entire time. And then back in 2019, we had a bit of a run up here. And then October, November, December, some downside action. And we had a cross here in October of 2019. And then our high was in June of 2019. So that's like 2 months. June, July. Actually, no, that's 4 months. Excuse me. June, July, September, August, September, October. Yeah. So this is an excellent question you had there for us. We even want to go further back to 2017. Cycle top was December 16th, 2017. Dropped below it in March of 2018. So that's 3 months right there. So the difference between this cycle and the past cycles is that we haven't seen the true parabolic growth. We've seen good growth, like this is very good, kind of like grinding up into the right. We don't see that parabolic effect. What the parabolic effect does is that when you have things like the moving averages, it means that you can get a lot higher above your long-term averages before your shorter or medium-term indicators can reconvene with where they're at. Because we kind of just went like slowly up into the right, it means that everything stayed relatively compressed and we didn't see that big expansion that we've traditionally seen at the top of the markets. So if this is the top of the market, that would mean that a lot of the traditional indicators that we used in crypto are actually not going to hit this time, just because mathematically the way that it counts doesn't work out. What we've seen in the past is that the indicators really pop when we see that parabolic growth, when we see that market get really overheated and maintain that for a good bit of time, versus this is kind of just like chop it, is like move up, chop sideways, move up, chop sideways. That allows time for all those indicators to catch up. So probably the most famous indicator that people talk about is the pi cycle top indicator. What that is a mathematical ratio of two different moving averages. I want to say it's the 365-day moving average times 2 over, gosh, I want to say the 111-day moving average. So if you move the mathematics on that one, the way it works is that because you have the 365 times 2, that is a very, very long-term indicator. So if you get quick growth above it, that indicator lags, but the 111 stays higher. So then we see that cross, and that's where the indicator actually pops and says, this is the top. We haven't seen that this time just because, again, all the indicators have been staying relatively the same together because we've been moving up pretty consistently and slowly over, like, gosh, the last 3 years effectively. Oh, all righty. Moonpill, he says the first bet was won. They did a double or nothing that Bitcoin would hit 210K by the end of December.
That's a lot of percentages for big, slow, fat Bitcoin.
Yeah, 210. That's literally more than a 2x from current prices.
Yeah.
In the time frame of what are we looking at? Like literally 45 days at this point because it's the 16th. 45, 46 days. You would have to have. It's not
going to happen, but that's a fucking spicy one.
There would have to be something massive, and it would also have to be massive and quick. One of the things that we've been talking about when it comes to quantitative easing and money printing through the Federal Reserve and the government, we can get indicators that stuff will happen, but honestly, that stuff happens on a longer time horizon than 46 days. So arguably, that's why I think that the case for an extended cycle that goes into Q1 of 2026 makes sense. It is plausible. I'm not saying it's I'm not saying it's the current prevailing theory, but it makes sense because we have quantitative tightening finishing the 1st of December. So we don't get another decision until the middle of December, the 13th and 14th. And then even if they do that, quantitative easing, even if they started it this in December, it wouldn't take effect until January 1st. And then after that, it's also going to take time to spin up and actually get the markets going. It's going to take time for the markets to absorb all that new money. And then it's also going to take time for people to get the new money and go buy assets with it. So it's a long conveyor belt of trying to get the decision being made. And then we actually see the decisions going into effect and then affecting the market and then people making moves based on the market moves. So I think we have bad news for Charlie on this one because 210K by the end of December. I would love to see it. I think we all would. We would all be very happy people. But I just think that's a little too high. Theoretically, if we did start running pretty good, 46 days, I could see recovering up to the 110, 115 level, making a breakthrough 126, and then maybe touching 140, 150. And that is a pretty aggressive crystal ball that I'm trying to read on that one. And again, it's going to take some big macro events to really hammer it home and get it going again. Because right now the market is looking a bit scared. Yeah. Speaking of which, we do have an article on that actually. So let's go over to CoinDesk. Crypto markets slip into extreme fear after Bitcoin falls or fails to hold the 100K level. The sell-off is attributed to a combination of factors, including profit-taking, institutional outflows, macro uncertainty, and low liquidity. Pretty much everything we talked about already at this point, but let's see what these guys have to say about it. Sentiment has plummeted to extreme fear, with the fear and greed index dropping to 10, its lowest since late February, as we showed. Bitcoin led the decline, dropping 5% over the past 7 days to trade at levels not seen since early March, with the wider crypto markets also losing about 5.8% of its value. Sell-off is attributed to all the stuff we talked about previously, but yep, there you go. Fell below $96,000. Second time this month, we saw it drop below 100K. And then, yep, that's the same chart that we showed you previously. Note the data points. Here's your 10. Here's our current 10. And it's a pretty big drop. So let's see. The sell-off is a confluence of profit-taking by long-time holders, institutional outflows, macro uncertainty, and leveraged longs getting wiped out. What is clear is that this market has temporarily chosen a downward direction after a long period of consolidation/ranging. What they mean by that is, if we zoom in on kind of where we've been over the last 4 months, we kind of held this area between 125 and 100K. We bounced around a good bit. We chopped around, but ever since we really started the year by reaching up to that 108 level, went down to about the 90 level. We had our breakdown through the tariff stuffs, but then we recovered to a slightly higher area as we pushed up towards past that 100K level, and then really had this 20K range that we bounced around for, gosh, what is this, back in May? So that's 6 months right there that we've been consolidating, and that's what they're pointing out in the article. Factors behind the sell-off include fading hopes of an interest rate cut from the Federal Reserve this month, with CME's FedWatch tool, one of our favorites, placing the odds of a quarter-point cut near 50%. On predictions such as Kalshi and Polymarket, traders weighed similar odds. Let's see if they have a good link for us. Yes, they do. Show me the data. There we go. We just had a cross. So, orange line, no change. Light blue line, quarter-point change. Darker blue line, 50 point change. Right now, we're sitting at, come on, scroll with me, 52% for no change, 46% chance for 25%, 25 point change, or quarter percentage point, if you will. It's moving, and I think a lot of the reason for it is that I believe they pointed out in this article. Yes, here we go. So on top of this, the White House recently said that recent key economic indicators, including October inflation, may not be released at all due to the delays for the recently ended government shutdown. This means traders and Jerome Powell will have less macro data to work with. The cherry comes in on top with the form of low liquidity, as the market is yet to fully recover from the major crash seen back in October, with order book depth across major centralized exchanges remain structurally lower since. Two things here. I'll try to break them down real quick. First up, not getting economic data from Bureau of Labor Statistics. That is some of the data that the Federal Reserve does use to make decisions. If they're not getting good data, we've seen Jerome Powell talk about this in the past, which is that he'll just not make a decision, or he'll make the decision of no change. Because granted, we did just start the new movement or the new stance that they have of trying to drive the interest rates lower to accommodate for the job market that's looking like it's getting worse and worse. No data means that they might not be able to justify continuing on this path until they get better, more complete data. So the shutdown means that we might not actually get the data. No data means we might not get a change. Lastly, here's the other point that they're talking about of why the markets are doing what they're doing. Low liquidity. So if you remember back, we had the drop from $126,000 to $108,000 Bitcoin. This also primarily was liquidating a lot of speculative positions, namely longs and shorts on the market. This is where we had $19 billion wiped out in open market interest. Currently, there's still about $60 billion in the open markets with people that have longs and shorts on, trying to have speculative positions. But it's a notable drop when we reach above $80 billion for that market. Additionally, on the actual exchanges themselves, because we had such a massive event like that, there are a lot of people that maybe have pulled money off the exchanges, pulled tokens off the exchanges, actually sold out of all their stuff. And it means that the overall markets with lower liquidity means that things can move quicker, faster. If there's lower liquidity, any additional downside is going to move it down quicker. The good news here is that you could go the other direction, which is that low liquidity means you could theoretically go higher quicker as well. But with low liquidity and the overall sentiment right now, which is pointing downwards, it indicates that there's probably going to be more downwards action, or at least that's what they're saying, or explains what happened in the most recent move that we had towards the downside. Alrighty. Tell you what, though, I do have a slightly a silver lining on this one. Good old rich dad Robert Kiyosaki says that a cash crunch is driving crash. He stays bullish on Bitcoin and gold. So he's argued that a global cash shortage is driving the market crash, and he's holding Bitcoin and gold, even adding that he'll be buying more Bitcoin once the downturn ends. So what's Rich Dad talking about here? He says the everything bubbles are bursting, adding that the real reason markets are failing is a global cash shortage. The cause of all markets crashing in the world is in need of cash. He expects what he calls the big print, citing Lawrence Lepard's thesis that governments will resort to massive money creation to cover mounting debt loads. The big print is about to begin, which will make gold, silver, Bitcoin, and Ethereum more valuable as fake money crashes. What he's talking about here when he's saying fake money is crashing, it's kind of not super intuitive, but if you follow me here, the governments that have the ability to print money, if they print money, it means there's more of it in circulation. It doesn't mean that they're increasing the value of it. In fact, it means that they're pretty much taking the existing value and dividing it into smaller chunks so that each of those new dollars being added is worth less. That is the money crash that he's talking about, which is an actual devaluation of the individual currency from the position of purchasing power, but the over number of like dollars will be going up. So because of that, that's exactly what we talked about previously when we talk about the Federal Reserve ending quantitative easing and starting the money, or starting quantitative easing and then starting up the money printers. That's exactly this. And that's what Robert Kiyosaki is highlighting here. He doesn't exactly spell it out completely, but he is pointing to the exact same thing that we've been talking about on here for a long time, which is that, look, as money becomes cheaper or it floods the system, assets are not entering the system, but their prices are going to go up as people are looking for a safe haven to park their money. Well, Robert Kiyosaki is a big real estate guy, a gold guy, and also a Bitcoin guy. So are we surprised that he's kind of pointing to those three and saying, yep, I think they're going to do well if these things should happen?
I do like Kiyosaki's take.
I do like
Kiyosaki. Yeah, he's an OG. I think he was a little bit slow-ish to get into the Bitcoin sphere. I want to say that he hopped on board somewhere around the top of last cycle or something like that. I could be wrong, but yeah, he's a smart cat, very good at marketing.
Definitely. He also, the absolute biggest wins that he has is in the real estate sector. He's talked about gold. He's also talked about crypto. Crypto more recently. Gold is a definitely older idea for him, but he has done like stupid well, like ridiculously well when it comes to the real estate. I think he's the guy that's famous for saying, if you owe the bank $100 million, if you owe the bank $10 million, that's kind of your problem. If you owe the bank $1 billion, that's the bank's problem.
Yep.
And that's him. He's not shy about it. He's like, yep, I am $1 billion in debt, but I'm net profiting because I'm leveraging debt in good ways to actually take advantage of it. But
yeah, he's a smart cookie. He plays the game.
Definitely. Alrighty. I know I just went on a bit of a soapbox there, transitioning from charts to article to Robert Kiyosaki. But Mr. Will Stevenson, do you have any questions for me?
I have no questions, but we do have a question or two from the folks in the chat. You want to take a quick break from the content and start shouting out some folks in the chat? I have them ready, and I am sitting in producer chair right now, so I'll go ahead and do some chat shoutouts while you have a delicious drink there, Mr. Zenith. We've been joined by our good friend, Mr. Hex Glenn, who says, hey, Degens. Hello to you too, Mr. Hex Glenn, a gentleman and a scholar and a winner of the Degen Roundtable sticker contest in the past. Reminder, guys, just like it says right down there, If you type in DRT into the comments, then you get a free Degen Roundtable sticker, like what I have right here. It's a pretty cool sticker. You can take them and you can apply them to your forehead, just like so, if you're a bald gentleman such as myself. Or you can put them wherever the hell you want. Degen Roundtable stickers, I fucking love them. So if you guys send me if you type in DRT into the comments of the show, and then send me an address on Telegram at t.me/Will Stevenson, like it's saying right there. I've already had a couple people do it while the show's been live, so those guys are getting some free Degen Roundtable stickers. Shout out to you guys who are participating and being awesome. But Hex Glenn won one of the sticker contests in the past, so it's good to see you, Mr. Hex Glenn. Next up, we've got Mr. Moondog, and I don't know if we
already hit that one.
We did hit this one. Okay, excellent. Good to see the
cool.
Moondog. And here's an example, Mr. Eddie Gastellum typing in DRT. We've also got Mr. Slide 180 being pretty coy here. DRT actually, because Will needs to come by and pick up the mead. I do need to come by and pick up the mead. I'm hoping that we get another respite here in Texas, Mr. Josh, because I have to boogie tomorrow. I gotta get the hell out of here. So I would love to come see you and grab that mead and drop off some more stickers for you, broski. So Mr. Josh is now in the runnings to collect a fantastic set of Degen Roundtable stickers. We've also got Mr. Just Live joining, being fun, typing in DRT shrimp dick. A Degen to the core. Good to see you, Mr. Just Live. Welcome, welcome. Also, we've got Miss Tam Tam with us. Miss Tam Tam says, hello, gentlemen. Hello to you too, Tam. Shout out to the #1 cheerleader in Hexico and Pulse Chain. Go check out her Tuesday night Twitter Spaces, where she helps new onboards learn about Hex and learn about Richard Hart ecosystem and all that good stuff. So good to see you, Tam. Mr. Moondog has also said, I challenge your challenge, Zenith, on evidence of how many Hex pulse chains can't properly explain Hex and pulse chain, but can dance circles around how Richard Hart is a genius man. Trust him, bro. So
yeah,
we'll have
this was in relation to his previous comment where he's saying people are buying MicroStrategies because they believe in, they just want to invest in Michael Saylor more than Bitcoin. And that some Hexskins and Poleskins try to do the same thing with Richard Hart. I made the argument it's harder to do so because there's no Richard Hart company that you can go buy, but there are the products. But hear me out. I think you're spot on there as well, which is that the overall sentiment is exactly what you said, which is that there are a handful of folks that don't truly understand the math. And I'm not saying you have to. The math, the arguments, the surrounding circumstances for Hex and Pulse Chain, like the T-shares, the overall networking effect, everything being built on Pulse Chain, don't really understand that, but they're very willing to make the argument of like Richard Hart's a genius, trust him, bro. It's that trust me, bro thing that is the. Yeah. It's not a great argument in my opinion. I understand that the man has done very well, Richard Hart, and that man has done very well in his life, especially with crypto products. It doesn't mean it will translate into all of the things forever into the future working out well. But at the same time, though, I think that he does have a good track record. I understand why people just do the he's a genius, trust him, bro thing. But at the same time, I think that's why we've spent so much time on this channel and in book club, really trying to break down Richard Hart, what he writes, what he talks about, what he puts out there to understand the sentiment and the strategy behind everything he does. And very happy that we're going to be talking a little bit about this later on in the show when it comes to the ProveX sacrifice that's going on right now. But it's interesting watching sentiment happen. Granted, we're watching it on X and Twitter, so it's like, is this really the best sentiment catcher that you can get out there? But at the same time, it is the conversation coming from the community, so it's important to pay attention to, in my opinion. But yeah, trust me, bro, is not an argument. Please don't make that argument. Try to figure it out for yourself. You guys can do it. It's not super complicated. T-shares are fantastic. I think that Hex still is the crown jewel of it all. And the ProveX token, I think, is an interesting proposition. Curious to see how it plays out. We will be talking about that later on in the show.
Yep. Moving right along with the chat shuttles, we've got Tam back again, letting us know that she loves my technical analysis, or rather, lack thereof of technical analysis. One of the running jokes on the show is that my TA is just this chart right here, which has money and time, and then the asset just kind of squiggling up. Basically, the summary for those of you guys who weren't here is I said, if you don't sell at a loss, then you can't lose. So the only time that you lose is when you lock in your losses. Other than that, it's all just theoretical funny money anyways. And we're all just here being degenerates and gambling. And all of your choices, all of the TA, all of the indicators, all of the market analysis, all of the fear and greed indicator, all of that stuff meshed all together leads to one of two roads, which is you're going to buy or you're going to sell. And if you do nothing and you already have it, then you're buying. If you do nothing and you don't have it, then you're selling. So it's like all roads lead to two places. So if you just decide, hey, I'm not going to sell when I'm at a loss, then you can't lose. So there you go. Good to see you, Tam. Thank you for the kind words. We've also got Mr. Eddie Gastelum here with a question. We will come back to this, but what are your thoughts on the new Safe 7 Trezor wallet looking to upgrade from the Safe 5? That's a good question. I know nothing about Trezor, but we'll come back to this one once we're done with the chat outs.
Yes, sir.
Next up, we've got Mr. Beyond All saying, hey, Degens. Hi, Degens. I don't know if the usual 4-year cycle halvening, blow off top or bottom is the same this time. I would not give much weight to the averages below or over it. Something abnormal. Good, a good question. We'll also come back to this one once we are done with the chat shoutouts. A good thought there, good sir. We've got Mr. Moonpilled off Rational Optics joining in on the StreamYard giveaway, typing in DRT forever. Remember, guys, all you got to do is type in the words DR and T all together with no spaces. You don't need a hashtag, don't need anything, and you are automatically added into the StreamYard giveaway. Right now, we have 5 entries, and I know that I'm at least 2 of them. So somebody's going to win some motherfucking stickers tonight, and it's going to be great. So good to see you, Mr. Moonfield Rational Optics. We've also got Mr. Hexkin Lost in Asia reminding everyone to scratch and sniff that cocaine-filled like button. I added in the cocaine-filled. He didn't say that, but those are my words. Remember to scratch and sniff that like button. Absolutely. I like seeing the like button number go up. I don't know if it helps or what it does, but it sure makes me feel good. And if you guys enjoy giving me a warm, fuzzy feeling, then I would just ask you, smash that like button. Next up, we got Mr. Russ has joined us, another Degen extraordinaire, saying, congrats for working Sunday night, Degens. Broski, it's not work if you love what you do. And I love doing this. I love hanging out with you guys. I love hanging out with Zenith, Brendan, all the folks on the Degen Roundtable. This is absolutely fantastic. And y'all make it even better. So thank you for coming and hanging out with us. All 70 of you, 45 of you on Twitter, and 25 of you guys on YouTube's. That's freaking awesome. Good to see you all.
Studs.
You're all
Thank
You're
you so
all
much.
fucking studs. Another stud is Mr. Diamond Hand Degenerate. It's not looking good, bruv. I beg to differ. I think that things are always looking good. Again, remember, guys, it's all up here. It's all up here. You can decide if it's good. You can decide if it's bad. If you closed your eyes and never listened to anything having to do with the Bitcoin market, you would have no positive or negative feelings about it. So because you can, if you have control over your own mind, you have control over your own ability to frame things, and you're a good salesman and or a gaslighter, then you can decide that everything is good or everything is bad, respectively. So good to see you, Mr. Diamond Hand Degenerate. Let's see if we have any new ones. It looks like we do. We've got Danny Boy rocking and rolling in. Good to see you, Danny Boy, joining in on the StreamYard giveaway. We now have, let's see, we've got 6 people in the Degen Roundtable sticker giveaway. So we got the warm fuzzies. We love the warm fuzzies. Good to see you, Danny Boy. Oh, and we've got, I do want to shout out Mr. Moondog.
He's got a good one here.
He's got a good one. Trust is a synonym, not to be confused with cinnamon, for outsourced counterparty risk. Crypto isn't about eliminating trust. You need it in a marriage, for example, but minimizing it with like counterparty risks in certain ways. So absolutely right. That's a very good point. It's a very good point. We all trust Satoshi not to sell that million Bitcoin and nuke the price. Is he going to do it? Who the fuck knows? Len Sassman is dead. We know that Craig Wright is not Satoshi. So who the fuck knows what's going to go on with the Satoshi wallets? But trust is definitely a very important thing. And removing as much trust as... Go ahead.
To his point here, what he's referring to is what's the outsourcing of counterparty risk is exactly what people are doing when they do things like invest in MicroStrategies instead of Bitcoin, because they think that Michael Saylor is going to do a better job of investing for them instead of taking it on their own. The risk still exists. Just because you're putting it somewhere else doesn't mean that the risk is not existent, and it does not alleviate you of the risk that you're choosing by getting involved in this entire thing in the first place. When it comes to the Richard Hart stuff as well, you can just try to believe in Richard Hart and hope that that outsources your counterparty risk to the guy that you claim is a genius. But at the same time, I think it's kind of the idea of being the emo, burying your head in the sand and then pretending that nothing around you is going to hurt you. And it's like, it's still there. it still exists. I think you're kind of just gaslighting yourself a little bit into believing that it's gone, even though it's not. There can be strategies around trying to find the people that look like they know what they're doing and have a proven track record, and that you invest with them instead of trying to do it yourself. It's possible, but at the same time, it just changes the math. It doesn't get rid of the risk. It just changes the math.
Yep, that's a good way to put it. I like that. Crypto will rise again, boys. You heard it from Josh, Mr. Slide 180. I like that. Crypto will indeed rise again, good sir. And also, Mr. Hexagon Lost in Asia, in DeFi, assume that you're being scammed until proven otherwise. That is a pretty safe mindset to have. So that's a good risk analysis. So there you guys go. Oh, and Danny Boy saying it might be Hal put off as the guy who was Satoshi. Who knows? And Moondog likes that you're sniffing what he's scratching. So
yep,
Mr. Moondog has.
I think we're on the same page here. We're right there together.
Mm-hmm.
Yeah. And then Hexagon Lost in Asia with the best one. Never trust, verify often, enjoy the yields while they last.
There you go. There you go, boys. All right, we're going to come back to some of these questions from the folks in the audience. And Zenith, I see you have a share screen pulled up. So we're going to get right into it. Mr. Eddie Gastel, a reminder, what are your thoughts on the new Safe 7 Treasure Wallet looking to upgrade from the Safe 5? So this looks like the new Trezor Safe 7.
Will, do you own a Trezor 7 or know anything about the Trezor 7?
Nope. I don't own any cold wallets. Zero. I don't have any cold wallets. Correct.
I am a cold wallet enjoyer. For the purpose of my personal crypto safety, I will not be saying what they are, but I will say this much. There are really two big competitors when it comes to the cold wallet space. You have Trezor and you have Ledger. Ledger has a history of having more issues than Trezor does. Therefore, just from the cybersecurity standpoint, I think that Trezor's track record is a little bit stronger. They also have a good variety of models as well. It's not shown here, but they also have the Model T, which is a very popular one that I know a lot of people have as well. But pretty much you have the T, the Trezor Safe 3, the Trezor Safe 5, and now it looks like they're introducing the Trezor Safe 7. So let's dive in together and see what we're looking at here. So the hardware wallet that redefines crypto security forever.
Real quick, I want to say that these are all campfire stories. Continue.
Yes. But hopefully, my goal through this is I want to break down, look at what the product is, what it claims to do, and then we'll talk about kind of the cybersecurity strategy surrounding it and whether you would choose to adopt this or adopt a different method for your own cybersecurity strategies. So we're claiming it is the first transparent, auditable, secure element, the first ever quantum-ready hardware wallet. We'll have to figure out what that means. And then secure wireless connectivity across mobile, desktop, and tablet with a little Bluetooth symbol there. So it looks like we get wireless charging out of this thing and Bluetooth as well, maybe. I'm just speculating based on the coil pack there in the back. You have to confirm that. The Tropic 01, the world's first secure element to open anyone to audit and verify exactly how it protects your crypto, delivering the world's most advanced hardware security and radically transparent crypto protection ever created. Okay, new technology. Sounds very cool. Auditable. We like those things. The dual secure element protection. The Safe 7 combines the Tropic 1 chip with an additional NDA-free EAL6 Plus secure element for the strongest physical protection in the industry. Quantum-ready architecture is the only hardware wallet using post-quantum cryptography to secure firmware updates, device authentication, and the boot process, protecting your wallet against future quantum computing threats. Okay, I think this is important to kind of break down what they're saying here. So it's using the post-quantum cryptography to secure firmware update devices, device authentication, and the boot process. So this is not turning any crypto suddenly quantum safe. It's saying that this wallet itself, the hardware and the software on the wallet is quantum safe according to them, which again, this is kind of a freshly pioneered territory. So we'll have to take that with a grain of salt. Yep. Wireless freedom as well. It looks like Bluetooth charging, wireless charging and Bluetooth convenience. I was correct on that. Okay. And good high-res color touchscreen. Cool. Touchscreens are cool if you're into that sort of thing. And built to endure, designed to impress. Wow. Look at that. Great stuff there. All right. Wilson. Yeah. All right. Well, let's talk cybersecurity real quick. If you were developing a cybersecurity plan, what are some things that you look for when you're looking for something that you believe will be secure or the most secure option you can go with? Are you looking for new technology, trusted technology, or kind of like revolutionary redesign stuff? How would you break those down?
I mean, can you ask the question again?
When it comes to adopting security methods, how do you feel about something that's new versus something that's tested, like tried and tested over time?
Well, they both solve different problems, don't they? So
That
new
they do.
solves problems that we know existed before that are not solved, and old solves the problems that it's always been solving. So it's like if you're looking to maintain a conservative mindset, then you go with old technology. If you're looking to expand a little bit and try some new things out, then you and adopt a more liberal mindset, then you test the new things as they show up. Now there's risk to the old stuff, there's risk to the new things. You just have to determine what's your risk profile.
Well said.
I don't really like again, I don't do cold wallets. I think that they're unnecessary personally. Because like my wallet storage is a piece of paper or a song that I've developed inside my own head or something like that. You know, I don't carry around a piece of hardware that remembers a code for me.
It's
As
true.
soon as I'm done with a wallet, I delete the wallet. And if I want to start it up somewhere new, then I start it up somewhere new, or I send it to a new wallet or something. So I'm very much of the mobile, adaptable lifestyle and mindset. I don't really believe in castles. I don't really believe in like heavy armor. I don't really believe in like, you know, hunkering down and being a turtle. I'm much more of the fast rabbit like mindset. Adapt and conquer the new problems. And so because of that, I use hot wallets. I don't like my system doesn't work for everybody. You know, if I increase my wealth by like logarithmic factors, then I might have to reevaluate how I do things. So all of this with a grain of salt, in that this is just the thing that works for me right now. So what about you? Let me ask your question back to you, Z. What are those things would you take into consideration?
I think that you have to look at the threat landscape as what we're trying to evaluate here.
Yeah.
We have a very good idea of the existing threats and how they've kind of evolved over the years. What we've seen a lot of is a lot of social engineering threats, meaning that it's nothing that's like technologically new. It's really just trying to trick a person into doing something by getting them to give information to an adversary who's trying to pretend to be something they're not.
Yep.
Will new technology from the cold wallet standpoint solve that? The answer is no. Will even a cold wallet solve that? The answer is also probably no.
Nope.
It can help, but it's not going to be the silver bullet solution you're looking for. When it comes to the idea of the quantum stuff, I think Moondog has a very good comment here. He says post-quantum cryptography is a lofty guess. At best, worthless. At best, it's worthless marketing fluff because upgrades drive profits at worst. So the quantum field is very, very new. I think that if you're looking to buy this treasure, it means that you're either someone who does not have a cold wallet previously, or you're looking to upgrade a cold wallet. I don't know if the new technology has really proven itself that it solves what it's claiming to solve, or that those issues even need to be solved in the first place. So, I happen to think that in this arena, you're probably better off using a different wallet. And this is personal for me because I look at that Safe 7 and it has Bluetooth technology, wireless connectivity, and I look at these as new avenues of attack that do not exist on the other models. So personally, I like the older stuff. I'm also just not a huge fan of touchscreens myself, so call me a boomer, but that's how it is. I prefer the manual buttons, USB connection, and it is self-isolated. There's only one way I can connect to it, and I know that I'm connecting because I'm plugging it in. So hear me out. I bet you that Safe 7 is probably a cool piece of tech, probably works great, but I think it opens up more issues that the other models didn't open up. But overall, though, I still trust Trezor the most. I'm not endorsed by them in any way, shape, or form. I happen to like their products, and I think they're good stuff, and I think they have the best track record in the cold wallet industry. But at the same time, folks, understand what a cold wallet does. A cold wallet is pretty much just an extension of a hot wallet, but has a physical connection to it that you use an authenticator, that is the cold wallet, to authenticate anything on the hot wallet. Pretty much what it does is it adds an extra handshake that you have to make whenever you're making transactions through your hot wallet. So you can tie it to a MetaMask, you can tie it to the Trezor software itself. Pretty much what it does is you create the transaction in your wallet. It says there's one more additional step required. The additional step required is verify on the cold wallet. The cold wallet it's like having a second password effectively, but this password is not a password that you remember. It's a thing that you have. The different ways to verify yourself are you have to be a certain thing, like a user or program kind of thing. You have to know a thing, whether it's a password, a phone number, an email, or you can have access to a thing, which is a physical device or another account. So those are kind of the three ways to do that. If you want more information on this stuff, go check out the book club episode that we did talking about securing wallets. It was, who was that by?
Oh, it was by Stephen Bates. We had him on the show.
Bates. Yeah,
a couple times we had him on the show.
Yeah. Really thankful to having him. He's a real smart dude. Good book. It's a great crash course into crypto security. It will help you get to start thinking about these cybersecurity things, because cybersecurity, it's kind of a different field. So it requires a slightly different way of thinking about it, as opposed to just, I want to go do a thing. It is, I'm trying to protect myself from all the possible things instead of just trying to accomplish one thing. So there you go.
Yep. I also think that this new device solves for convenience more than it solves for security. The fact that they added the Bluetooth, the fact that they added you said Wi-Fi as well.
Bluetooth and wireless charging.
Wireless charging. Okay. Yeah. So like I don't know how much, danger goes with wireless charging, but I know for a fact that there's danger that comes with Bluetooth. So like it's like you were saying, I think it's just another potential attack vector. Not that it necessarily is definitively another one. It's just that it could be. It's one more potential hole that needs to be plugged up if the water level rises. So
it also creates another failure point inside of the device itself, which is that the previous devices are powered off of whatever thing you plug them into, as opposed to this as a standalone unit, which now has its own battery and charging. It's just extra complication, and I personally don't see any additional upside for the complication, and I'm very happy with the model that I have, which I will not disclose, but it's a good model because I like Trezor, and I think that they have good products. So if you want the convenience, cool. Just understanding you're introducing extra complexity into your life, and you got to ask yourself, is it worth it?
Yep. Conduct that little risk assessment where you calculate the likelihood of the thing happening, and then you cross-calculate it against the severity of the consequence. So like high likelihood, not severe, no worries. High likelihood, high severe, that's a problem. Low likelihood, low consequences, no worries. Low likelihood, high security, it's like you got to implement some controls there. So like wherever it falls on that little
insurance.
Yeah, absolutely. So, Mr. Eddie, thank you very much for your question, good sir. I hope that helps. I know nothing about it, and I will not be getting one, I probably won't be getting one. But those are our thoughts on it.
No,
our next
look, real quick, if you're someone like Will and you've developed your strategy about using hot wallets and like using them kind of like burner phones, if that's what you're doing and you do it smartly and you build it well for the correct purpose, that works out, and you don't even need a cold wallet. If you're someone who wants a strategy that can really benefit from an extra layer of protection, like maybe trying to create like some sort of like long-term vault style wallet that you have very, very limited connectivity to, a cold wallet might be a pretty good idea to help just add that extra layer of defense for if you're trying to build like your Fort Knox of crypto effectively. So take it under advisement, please. But not advice here.
Yes, take it under advisement, but it is not advice, because
not saying you have to advise you from us, but just understand, build your strategy, audit your strategy, stick to the strategy.
We're here to give information, not give advice. So there you guys go. Speaking of information, we've got a question about some information from Mr. Beyond All, who says, "Hi, Degens. Don't know if the usual 4-year cycle happening blow off top or bottom is the same this time. Would not give much weight to the averages below or over it. Something abnormal." I don't entirely understand this. Zenith, can you crack this open for me?
I understand. So what he's saying is he's calling into question the 4-year cycle. Based on everything that we've seen for the 4-year cycle this time, it looks very abnormal. So the question is the 4-year cycle dead? Is it still alive? Well, we, as always, the chat, you guys are fantastic, and you preempt the articles that I pull up like pretty much every time this episode. So yeah, here we go. Let's dive into it. Going to us come from Cointelegraph. Bitcoin's 4-year cycle is broken, and this time data proves it. Data shows that Bitcoin's average annual returns have gradually declined with no peaks at all in the last cycle, confirming the hypothesis that Bitcoin's risk to return structure has changed. The phenomenon of financial bubbles is a hotly debated topic among industry operators, and there are several academic papers on the subject, starting with Professor Didier Sornet, that is an unfortunate name, I'm sorry, the Diddler, in 2014 study of financial bubblers. In fact, the paper defines
that's a French name. That's Dadier.
Oh, Dadier, thank you.
Dadier.
Defines a bubble as a period of unsustainable growth which rises faster and faster, i.e. growing more than exponentially. Obviously, bubbles by definition are destined to burst and bring prices back to their starting value or worse. In recent, Bitcoin has experienced periods of more than exponential growth followed by very sharp declines called crypto winter. A period when no one talked about Bitcoin and other assets anymore, meaning there was a freeze around the sector and prices collapsed. Previous declines of the Bitcoin price bubble were 91%, 82, 81, and 75% this last crypto winter. So far, the price trend of Bitcoin has followed a distinct cycle marked by a halving every 210,000 blocks, equal to about 4 years, which has rhythmically determined periods of decline, recovery, and then exponential growth. I gotta find, let's see, without going into detail about this indicator, which is actually very useful for those who use quantitative tools to make investment decisions, the purpose of the first part of the analysis is to verify how much and how Bitcoin has entered a bubble in the past. To do this, if DR, what does DR mean? The ratio, the diamond ratio.
Republic. Oh,
it's Dominican Republic. If it's less than 0, it means the price is falling. If it's less than 1, it means that it is sustainable. If it equals 1, it means that growth is exponential. And if it's greater 1, it means that growth is more than exponential, which corresponds to Sornet's definition of bubbles. So in the past, here's our ratio, this line right here. So we see that 1 is where it's going exponential. Anything above 1 is where it's beyond exponential, and that's the top of the bubble. But as you can see based on the chart, we really haven't broken above 1, which is that there was a time where it went exponential after the election very briefly, but then after that, it's above 0, so it's growing, but it's no longer exponential. Where's more data? Drawing conclusions from the analysis from a statistical point of view. On 4 occasions, Bitcoin can be considered to be in a bubble phase with more than exponential returns, but unlike traditional bubbles that then burst in a few months, Bitcoin has shown resilience in its growth, which on demand has a diamond ratio of less than 1 with high but not exponential growth. In fact, a power law can describe the growth of Bitcoin's price very well. It can also be clearly seen that these bubble phenomena have decreased in intensity and duration over time, so much so that in the last cycle that began in 2024, there has been, at least for now, no more than exponential price growth. Both returns and volatility are decreasing, suggesting that reaching values above 1 million, if ever, will probably take 15 years, and therefore many predictions of Bitcoin reaching $13 million by 2040 are statistically very unlikely. The approval of ETFs in the United States, with BlackRock's IBIT Spot Bitcoin ETF reaching $100 billion in assets under management in less than 3 years, becoming by far the fastest growing financial product in history, has broken the Bitcoin cycle that predicted periods of growth, hypergrowth, and crypto winter, with new highs being reached after the next halving. Greater stability in returns and lower volatility suggest that the crypto winter will not be very cold, with losses exceeding 50 and 60% as in previous cycles, but could alternate periods of decline with new highs without the exponential jumps seen in the past. All right, that was a lot of words. Let's go to what I think is the most important chart. That's this one. So remember, this is the diamond ratio, DIAMAN, name of the guy. So again, this kind of goes back to the indicator talk that I had earlier, which is that the pi cycle top indicator and the market value, realized value, Z-score indicators really they hit their indicator point and go off once we have exponential growth. As you can see here, we just barely approached exponential growth for a small period of time before immediately coming back to slow growth. So because of that, it looks like, yes, the cycle is actually starting to change, and the old school indicators that you have in the past might not be working. If we want to compare what we see in this cycle versus our previous cycles, let's take a look. Previously, we had the 2021 cycle. Early on, there was growth accelerated. Then we had COVID, so it dropped off. And then we had our big pump to the top. In the year before that, we had growth, small drop, full exponential. And then before that, way back in the early days, we had pretty much just full exponential right off the rip. So we don't have a whole lot of data points. This is if you're listening to last week's episode with Agent J, he made a very, very good point here, which is that there are so few data points that we are trying to identify trends, but it's really hard to call them trends when you have 3 data points. That's just like the start of an approximated line. It's not anything confirmed. What we've seen with the ETFs this cycle is that there is so much money that is going into them. It is almost, it's kind of taken over the crypto markets from the standpoint of who has how much money and how does that money affect the markets. In the past, when we go exponential, we see a lot of retailer traders get in there and try to pump it. And then that gets more people to try to get in there and then also take advantage of the already existing trend and try to ride it to the upside. This time, we haven't really seen that. Retail trading has not been in the markets this 4-year cycle, and traditional finance has been pretty much since the beginning of 2024, which is, 2 years ago at this point. So the argument and the data suggesting that the 4-year cycle is ending. It is showing up, and it is making its case very well, I will say. I will not say it has confirmed the death of the 4-year cycle, though. That is where I'm going to differ with people on a lot of stuff. I think that the 4-year cycle it's a bit of a phenomena that is observable, but at the same time, it's not law. It can change, and it can probably go to a longer cycle, or it can fluctuate between being shorter and longer in and of itself. The argument being made is that the 4-year cycle is dead. The indicators are showing up, but we don't have confirmation. What would be confirmation for me is that if we see the 4-year cycle low be unconfirmed, meaning that we had our last low pretty much the end of 2022, meaning that we're expecting our next low to be end of 2026, November, December timeframe. If we don't hit that target, that will be the confirmation for me that the 4-year cycle is dead, because the 4-year cycle really runs best measured bottom to bottom. Top to top is also a nice indicator, but that one fluctuates a lot more than the bottom one. The bottom indicator is way stronger than the tops, but at the same time, they are both observable, and that would be the confirmation for me to agree with these people, which they have very good data here, by the way, and they make an excellent argument. But until I have confirmation, I'm going to assume that the trend is going to hold. What would that mean as a strategy in building a strategy? Okay, if I'm waiting to be proven wrong, it means I cannot shift and take advantage of things that are building in front of me. But at the same time, if I'm proven right, then it means that I stuck to my guns and I still made what was the optimal play for the time. So that's pretty much going on with that. Look, 4-year cycle, I think the indicators are showing up. Like I said, I think it's the 3rd time I've said it now, but like, this is honestly one of the best cases that I've seen made against the 4-year cycle, and it's done very well with good data, good stats, good graphs. So if you're interested in it, go check out Cointelegraph by Danielle Bernardi. Bitcoin's 4-year cycle is broken, and this time data proves it. Good article. I like it. I think it has good data points, and it's a good discussion starter as well, for sure. All right. Enough of that one. Do you have you think it's dead?
Do I think that Bitcoin is dead, or the cycle is dead?
The cycle is dead. You getting ready to put it in the casket and pay F to press your respects? Press F to pay your respects?
I can't sell if I'm at a loss.
That's true. That's true. Yeah.
I mean, I suppose I could do a temporary exit, but I think that it's foolish to do so, cycle or no cycle. So it's like, if I got to ride another 4 years, I got to ride another 4 years. I still have a job. I'm still making money. Like this, it's gambling money. It's fun money. It's not my retirement. It's not my rent. It's not my paychecks. This is extra. So if it's over, then cool. If it's not over, then also cool. Again, guys, it's all in your head. If the cycle is over, the cycle's not. Remember, the word cycle is just the word that we've attached to it because it's done some things in the past. Like just because it happened 3 times before doesn't mean it's going to happen again, or 4 times, or whatever, right? So like, we've labeled something that's already happened. That doesn't mean that thing is continuously happening all the time.
Yeah.
And it could just be we were measuring the wrong thing. It's like, how many times did like the cavemen measure the stick before they determined that it was the thing that started fire? I don't know. That was a terrible analogy. Terrible analogy. I can make a better analogy if I really sat here and thought about it. But the point is, like, people will oftentimes measure the wrong things. Oh, like how many people drop dead in your village because one person's a witch or something, right? Like, perhaps we're measuring the wrong thing. And instead, we need to check how much mold is in our grain stores and how much ergot we're consuming, and we're all hallucinating and going crazy before we start burning some people alive. So it's like, we could just be measuring the wrong thing. It's entirely true. Only time will tell. So like, what do you do in the meantime? You do what's best for you that gives you the most like power at any given point. So that's my thoughts on it. So I kind of dodged your question there, I suppose. Didn't really answer it directly. I will say that yes and no. The cycle is both dead and alive.
Fair enough. Tell you what, that makes sense. Let's move to what I believe will be our final topic of the evening. And it comes to us from our very own Richard Hart. I know it may have sounded like I was giving him some flack earlier, but I still very much am a fan of Richard Hart and the products he makes and the books that he puts out and the ideas that he promulgates. I like what he says. And, well, the new token, ProveX, for his new project, has a sacrifice going live now. So let's see what we got going on. Our tweet here says only $1 million so far at provex.info. So as of day 2 of the sacrifice, we had $1.1 million. 2,936 total sacrifices, not individual wallets, but total sacrifices, and 406 tokens have been sacrificed. So let's go over to our website. We are on day 6 of the sacrifice. $1.8 million sacrifice so far, 4,000 sacrifices, 426 unique tokens across 24 networks. All right, we have a fancy graph here. What are we looking at? Well, the fancy graph says that this sacrifice is going to go until January 9th. But there are also things that are important. Volume ranking is going to end on the 4th of January. And we're going to have a rate increase of how much sacrifice it takes to get points, starting our big stair step here, starting on December 2nd. So that means you still have about 16 days to get in on the sacrifice. If you want to get in on this, what you are doing is you are doing this. You are sacrificing your coins to make a political statement. You believe in capitalism, the removal of middlemen, and replacing trust with proof. You are sacrificing your coins to prove you are serious about this belief. You have no expectations of profits from the work of others. You understand what you sacrifice can be sold, and you will receive no benefit from it. So the game here is you're sacrificing for this, and then you're going to get points for a leaderboard to show how cool of a person you are. And then as a result of that, Richard Hart may or may not choose to reward your sacrifice by giving you an initial allocation of a token that will launch with 0 value, and you have no expectation of anything based on the work of other people. So let's be very clear about that. This is the same language that he's used for all the other sacrifices. We didn't get the official ruling by the court when it came to this language, but we did get some very strong indication that they didn't have any issues with it either, because they were trying to claim it's fraud. And then the judge, as we talked about earlier, said, how is it fraud to do exactly what you're saying you're going to do? So as it stands, do we have a definitive answer on this sort of sacrifice statement? No. But at the same time, we still do have precedent, and we understand kind of what we're getting ourselves into here. So let's see what we got going on. Right now, there is a lot more money going into this than I had previously seen. The big debate that's been going on is that there are many, many tokens you can sacrifice, but you cannot sacrifice pulse chain tokens themselves. So pulse chain, PulseX, incentive token, Hex, eHex, pHex, whatever it is, those are not eligible for sacrifice. Pretty much you have to sacrifice some sort of like big L1 token on a different network. Nothing coming from pulse chain will be counted in the sacrifice. So there you go. Let's look at the leaderboard real quick. Number 1, currently, if you want to be the new top dog, you have to sacrifice more than $202,749.81. This is a total of 26 sacrifices from the same wallet here. After that, we have 50,000, and then we drop to 40,000, and then we get into the 30s and 20s, and this is only our top 10. Number 10 place is at $20,759. Okay, that's still a hefty penny. We have 2,263 total wallets that are on the leaderboard as of right now. So let's see what it would take to get a certain place. Will, give me a dollar amount that you want to look up.
Dollar amount that I want to look up. I'm going to say 1,000.
$1,000? All right.
Yep.
Let's see how long it takes before we get to $1,000. We are on page 10. Okay. Page 15. Nope. We're getting closer. Page 25. We're seeing a lot of 1,000-ishes, but no 1,000. All right, here we go. $1,000. If you sacrifice $1,000, you'd be tied for 331st place.
There you go.
with 13 million points as opposed to 5.8 billion for first place. So by a factor of 1,000 effectively.
All right.
Yeah. So are there a lot of wallets that are getting in at above this $1,000 level? Yeah, for sure. Like over 300 people at this point effectively. And if we go a little bit low it, we're looking at like 965. That's place 360. Even if we're going to go a little bit lower, where's $900? $900 put you at 376th place. Keep in mind, this has increased aggressively from the last time I saw it, which was on day 2. Day 2, I was looking at $500,000 in sacrifices, and I want to say the biggest sacrifice that I saw was like $20,000. We're looking at over $200,000 for first place, and even our 10th place is $20,000 themselves. So, look, if you want to be a whale, you got to have whale money to play. At the same time, though, the point of me running through this is to show that people are sacrificing for it. And on top of that, we also have seen a good amount of movement in pulse chain prices themselves. The reason that I mentioned this is because this has been one of the big debates going on, which is that why did Richard Hart not want people to sacrifice pulse chain tokens for this project? Okay, well, you can say that he doesn't want these things to have sell pressure or have their market manipulated by people trying to scoop up these tokens in case they were given like some kind of bonus or something. Like even people like me speculated about in the past, which would maybe a play that he did. That was not the play that he made. Pretty much since the sacrifice was announced, we've seen a drop in pulse chain price by about 30%. So one of the big debates going on over on Twitter was, why are you doing this? Because you're incentivizing people to sell out of their core token positions in order to get in on the sacrifice. Is that not what we want for the people that have been holding for so long? And it seems like you are not rewarding the people that have been holding the token, even though one of your core mantras and philosophies is delayed gratification, aka buy early, hold, sell much, much later, as we've seen through mechanisms like Hex's Quattro Cinco staking mechanism and the longer pays better bonus. That's a part of it too. Will, do you think it's worthwhile to ask the questions of like, why is Richard Hart doing these things? Why are we trying to get other people to sacrifice other tokens instead of trying to get into the ecosystem by buying up these tokens, sacrificing and burning them to a degree?
Your question is it worth thinking about?
Yeah, is this something that we should be like? It seems like we might be
Sure.
getting a little spun up on the idea.
Well, so it's worth it to think about it in the same sense that Dwight D. Eisenhower is quoted as saying, the act of planning is invaluable, but all the plans themselves are 100% useless. So I would apply that same sort of sentiment to this thing. Yes, you should think about it, but no, you shouldn't like lock on to one particular answer and be like, oh yes, this must be the one, because like if there's one thing that Ricky's fucking good at, it's like totally not doing the thing that everyone thinks he's gonna do. So like, odds are, if you can think of a reason, it's wrong simply because you thought of it, and like nobody's gonna fucking guess, right? Like when he said, guess the next project that I'm coming out with, like it was a fucking long time before someone even got like kind of close without really even being like really on the nose of what the actual project was. So like the odds of you thinking up the reason why he did it and wondering why he did it are probably asinine, but it's good to do as a thought experiment to assign your own probabilities of value to it. I would also say that like one of the benefits of this is that it forces the people who were in it for a short time to reconsider like how their exit strategy. So if he wants people to hold the tokens and he gives people a reason to let go of the tokens for a different thing later, then it's like he is de facto reinforcing the idea of trading something that's supposed to be valuable for trading something that's unknown. So there's a sense of like, yeah, if you're going to be a core token believer, then you should believe in the core tokens. And if you're just looking to make a buck, then look to make a buck. But like, don't pretend to be a core token believer and then complain about like, why can't I get rid of this core token that I'm supposed to believe in? You know, it's something worth considering. It's like, if I'm supposed to believe in this thing, then I shouldn't want to get rid of it. If I'm supposed to think that this thing is a really cool, awesome invention, then it's like, okay, well then should you sell it? Now there's obviously that's like the long-term kind of critique. The short-term critique is like, yeah, take advantage of price fluctuations and make a buck, and buy things that are low and sell things that are high. The reason that that's like important to consider is like right now the price is low. So what should you be doing? Probably not getting rid of it. Probably not. I mean, you can if you want to, you know, but like if you're selling a thing when it's down lower than it's ever been before, then you're speaking by your actions that it's not worth it, when you could go and gamble on the brand new shiny thing on the horizon that nobody really even knows what the product market fit or what the worth is. Like if you want to buy into the ProveX sacrifice to gamble on Richard Hart's efficacy of creating a really nice looking chart, then do so. And if you think that the stuff that you've already got going on is really cool and really awesome, then act accordingly. So that's my thoughts on that. What about you, Z?
That's fair. Give me 1 sec. This actually just popped in, and I want to cover it now because I had it pulled up for later. Mr. Fast Abdul is in the house. He says, I am here for the tech, but Fast Abdul doesn't know this. He is also here for himself, because I got to say, when it comes to this whole ProveX sacrifice stuff, there's a lot of debates. I see a lot of emotions, a lot of people arguing online. Fast Abdul has been, in my opinion, one of the best voices on this, a very level head. We got a great tweet here. He says, the sacrifice is live. No hurry. Take your time. It is okay to not participate. I think that this is one of the big things I wanted to bring up here, which is that, and Fast nails this on the head, which is that this is another thing. It's not the end of the world. Does this raise a lot of questions and can bring up a lot of debate? Yes, for sure. But at the same time, though, like, please, please, please be very clear-headed about the decisions you're making on this kind of stuff, because nothing is guaranteed. And yes, it does actually have ramifications on the ecosystem overall. You can't control what everyone else is doing, but you can control what you do. Give Fast Abdul a follow on Twitter. It will help. I think it will help balance out a lot of the conversations that you see. He's a good friend of ours. We like him a lot. And I think he has one of the best takes that I've seen on this stuff here, which is that, look, it's okay to not participate. Are you still affected by everything going on in the overall ecosystem? Yeah, you are. But at the same time, it doesn't mean that this is something to split the community over, in my opinion. And if anything, I think this is something that we should be looking forward to, because I think it's a cool project for sure. The token aspect, there's going to be a lot of game theory surrounding it, but the underlying project itself, which is being able to actually remove middlemen and verify your own transactions and effectively do OTC deals with anything, with anyone, and verify it on blockchain, I think it's worthwhile and actually has a good amount of potential to disrupt an entire industry there. So there you go. Fast Abdul is saying, should I trust what the guy in the boat says or the guy who is inside a video game? I think Boatman has some good takes there as well. So I trust this guy myself. Yeah,
I trust you, and I trust Fast Abdul. There's a lot of people that I trust. There's a lot of people that I don't trust. There's a lot of people that lie somewhere in the middle of that spectrum. And my response to Fast Abdul is, you should trust the people who earn your trust based on your own value set. So like, Fast Abdul is a cool guy. There's a lot of things that I would trust Fast Abdul with. So fucking
I'm sure.
Excellent. And also you too, Zenith. I trust you too.
Oh, thank you. I trust you as well. We have a good track record together, and I like your vibe.
Hell yeah. Hell yeah. The good vibrations.
Right. I interrupted your question to plug our boy Fast Abdul there. He says, good takes, boys. Good takes to you, sir. Appreciate you trying to help keep people a little more level-headed during these trying times. You're doing great work. Thank you very much. All right. So what did we get? We got sacrifice of non-pulse chain tokens. This is another addition to the pulse chain ecosystem. Has the pulse chain ecosystem paid off yet? Has it seen good appreciation? No. The answer is we're still honestly pretty close near all-time lows.
I gotta push back on you. It's a question of what are you measuring? If you're measuring price, absolutely. If you're measuring other things, then it's up to measuring price is the that's one way to look at it, which your metric is accurate. The price is not good.
I think that this is a very important measure. This is a very important metric to
100%.
measure, though, because these are financial instruments and products at the end of the day. We are doing this either because you want to use the tech or you trying to invest in it and be ahead of the game so that it can be a better use case in the future. I think that the opportunity cost is really the issue at hand, which is that if you're in Pulse Chain, it means that you have parked your money here and not in other things that you wish to do with it. Therefore, it's kind of like, yeah, do people expect some degree of price appreciation? Yes. Is the overall market where Pulse Chain is? Yes and no. Alts are not doing great right now, as we've seen by the charts. But at the same time, Pulse Chain is also in a bit of a unique situation, being its first cycle, and it is down more than the others. So, with that being said, it seems that one of the takes is that Richard Hart is kind of chasing shiny, or trying to create shiny object syndrome and get people to go to the new thing for whatever reason, instead of trying to fix the existing system that everyone has already been heavily invested in ever since the sacrifices for Pulse and Pulse X. So, with that being said, it does kind of raise the question, like, why did we not have the ability to have these tokens sacrificed? Does it mean that you're betraying your core positions? No. If anything, the ability to sacrifice these tokens would arguably increase the buy pressure for those tokens, because it means that if you wanted to get in on this, you would have to go that route. Okay, counterpoint. By excluding these tokens, does it mean that you're getting people from other ecosystems who are in those spots to get in on this ecosystem? That is the stated intention by Richard Hart, effectively, which is that he's trying to get other people in. The counterpoint to that is that the people that are the most interested in Richard Hart products are probably the people that already have Richard Hart products. So, is this an attempt to branch out and get more people in? Yes, for sure. But I think it's also very important to be realistic and understand that repeat customers are some of the most purchasing customers. Therefore, everybody that's already in the ecosystem has some degree of a desire to probably get in on this project, I would argue, to a large scale. So I think it's kind of splitting the baby on this one, which is that by doing the tokens by doing the sacrifice tokens as non-Pulse Chain tokens, you are not incentivizing adoption of Pulse Chain. You're incentivizing selling of other assets. But I think that to say that the degree of which you're incentivizing people to sell has a notable effect on the other ecosystems, I think is foolish, because the other ecosystems are so massive. These are major L1 chains. We have like almost $2 million in the sacrifice here. $2 million across multiple other massive L1s does effectively nothing. $2 million on Pulse Chain would do a lot more, in my personal opinion. I'm not saying they're correct, but I'm trying to just let the folks know at home, like, these are the arguments of the camps that are kind of being established from what I'm seeing, which is that I even talked about it previously, which is like, it'd be cool if he launches a new product and then he gives you bonus points for sacrificing incentive token or something, which would create kind of like an artificial buy and burn that we hadn't seen previously on the token, and it would kind of drive price and also maybe adoption and buy and burn over there. So it's just interesting. Go for it, please. Yeah.
I would say that might kick the problem down the road. It's like kicking the can down the road when you say, like, this thing that's supposed to be already valuable of its own, now you can get rid of it and get more value in another thing. Like that, it kind of like, do you understand my sort of point here?
I understand that the large point you're making is you want this thing to be valuable, but you also want to sacrifice this thing that is valuable. I think that what I'm trying to point to is something a little bit larger than that, which is that if you want it to be valuable and you're incentivizing things to happen to it, there are multiple ways to approach the game. You can be a person that just wants to buy incentive token and hold it, or you could be a person that wants to actually get in on the sacrifice. Or even conversely, you could be someone that looks at it and tries to take the short position, or the opposite position, which is that this asset price is being bought up. It will crash once the sacrifice is over. I will sell my asset now and rebuy in at what are expected to be lower levels later on. I think that when we're talking about the entirety of Pulse Chain, there's no one strategy for everybody that's in it. Everybody has their own individual investing appetite and strategy and risk profile. So I think just trying to shoehorn everything into one take is probably not going to be a great way to do it. But at the same time, when you're looking at what Richard Hart is doing, it definitely kind of raises eyebrows a little bit of like, okay, why is he doing this way? Okay, I understand you want adoption, but you're also kind of just ignoring the people that have been with you from the whole time, and you're all about rewarding people that have delayed gratification. So why are you chasing the new thing when when the delayed gratification crowd is here? It's like, it just, some of these things do seem contradictory. And the only person that we can ask this is Richard Hart, but guess what? He's not really answering a ton of these questions. So we only have speculation at this point. Which,
and here's the other thing is like, if you ask him and he gives you an answer, then now you have this warm fuzzy security. Like, where's the risk in that? And if there's no risk, there's like less, like things that aren't risky don't generate a ton of as much value as the things that are risky. The risk itself is a force multiplier, both downwards and upwards. So it's something worth considering. Like if you're chasing security, if you're chasing that warm fuzzy feeling of like, oh, I'm wrapped in my cozy comfy blanket and everything will be okay because Ricky's going to take care of me because he's my my loving patron or something like that, then it's like that's the position that I personally don't want to be in. I like the risk. I like the fun. Just my 2 cents anyways.
That's fair. That's fair. I don't know if I have a whole lot more to say on this issue. I just wanted to present what the discussion I've seen online is and try to break down what the camps are and kind of the pros and cons of both ones, which is that people are saying, why do we even have a new project? Why are we doing a sacrifice? Why are we not sacrificing pulse chain tokens? It's like, there are sides to each of them that make sense. And then I do believe that this also does slightly raise questions about the entire ecosystem as a whole. Like, what is the direction we're going? What are we trying to do here? Is this the last one? Will there be more? How big is this one going to be? What are we trying to do with it? There's a lot to be said on it. And one of the overall sentiments that I've seen is that there's a lot of people that are kind of pissed about a new sacrifice instead of being in on all the old sacrifices and not being rewarded for it, for, still having that delayed gratification and sticking in it and sticking up for it for so long, even when it wasn't easy. And then it just seems like they're onto a new fresh thing now. I don't know.
I don't know either.
I can only hope that people do what they want. The project is massively successful, brings tons of people into Pulse Chain. Pulse Chain flourishes. We have a great year. We all get together in Vegas and we have the greatest golf tournament ever. And we all just have the best chart, the best community, the best projects.
On the subject of all of us winning, Zenith, I would like to hijack the show for a moment, take a minute to do some chat motherfucking shout outs and a giveaway for some stickers for the folks at home. Reminder, all you got to do is type in DRT into the chats and then I will send you free DGen Roundtable stickers just like this one right here. This is actually a pretty quality sticker. It is I think it's a PVC sticker. It is not paper. Like they're quite difficult to rip. So like they're stretchy plasticky stickers. So I quite like them. And if you type in DRT into the comments then and send me an address to send it to on Telegram, then I will send you one of these wonderful and lovely stickers that is now stuck to my hand because of static electricity, in addition to having a sticky back. So go ahead and type in DRT, just like the scrolling Chiron says right down there. Type in DRT. You will be added to the StreamYard giveaway, which I'm about to roll through right now. Let me pull up my share screen right over here. Present or invite, share screen, StreamYard giveaway. Here we go, guys. This is the giveaway. All you got to do. Where is it? Why is it not showing up? Oh, there we are. Zenith, I'll let you do the production thing. All right, guys. So we currently have 7 entries. I'm going to scroll in, zoom in a little bit on that bad boy, that bad jamba right there. So we've got 7 entries. So if you guys type in DRT in either, oh my goodness, why is this all zoomed in now? Oh man, I can't zoom in on StreamYard giveaway while also zooming out on the other one. That's a bummer. Oh well, who cares? But yeah, type in DRT into the chats and you get a chance to win a sticker. Just kidding. It's too late. I'm going to click the draw button and let's see who is going to be the winner. I know we have some sound bites here.
We are...
Oh, shit. Good job, Danny boy. Fantastic work, good sir. You did a very good job of typing DRT into the chats. So
the best, one of the best.
Yep,
Elite.
there you go. Oh man, we got some fun sound effects. I've not gone through all the the Wilhelm scream. Good job, Danny boy. If you send me a message in Telegram, then I will send you a bunch of stickers in the mail. And for the rest of you that just typed in DRT, you guys get exactly one sticker that is the Degen Roundtable sticker. I will send it to you in regular ass mail with a stamp and with my return address, so that way you guys can stalk me. Just kidding, you can stalk where I work. So, but just kidding. It's a great time. I love giving out stickers. I've given away, I think probably 100 stickers so far. And we've done this giveaway maybe 12 times or so like that. So it's freaking awesome. Love you guys all. Mr. Just Live says that it's rigged. Oh no, it's rigged. It's rigged. I think, have you won it yet, Mr. Just Live? I don't think that you've won it, but good to see you. I'm going to run through some chat shout-outs right now. We've got Betty in the chats.
I got one I want
ahead.
to hit first, which is our boy Fast Abdul. He's saying, have you guys heard of Hart's Law? Yes, we have, sir. Hart's Law,
Yes.
aka the network effect. Very real, which is that the value of the network is an exponential of how many people are involved in the network. So
that is Metcalfe's law. Hart's law is about liquidity bonding.
Oh,
so assets that are paired together in liquidity rise and fall similarly, not necessarily 100% accuracy, but like if Bitcoin is heavily tied to Ethereum in liquidity, then their prices will rise and fall, it as such. Now, this doesn't quite play so much when it's like a small percentage of liquidity pool, but if all of your tokens liquidity pools are tied with another very specific token, then they will rise and fall in conjunction with each other. So that's what Hart's law is. But Metcalfe's law is another great law as well. So good to hear. Zenith, take over chat shoutouts. I gotta chat with Marco real quick. By the way, everyone, Marco says hello. Say hello to all the folks at home. Marco gives a thumbs up. And we've also got Reggie in the background. So shout out to the Magnus crew. You guys are awesome. Zenith, take it for a second. I got to say goodbye to these gentlemen, or
will do.
Good night and things.
Alrighty, Betty coming in. Know anything about Tangent Wallet? I am sad to say I do not, but it does sound like Moondog has a little bit of experience with Tangent Wallets. Let's take a quick look. What are these? Hardware wallets from $54. Let's see what we got.
I'm back.
Welcome back, sir.
I guess I'll remove my share screen.
Voila. All right, Tangent Wallet. Crypto hardware wallet. Slim as a bank card. Secure as a bank vault. Store, buy, earn, transfer, and swap thousands of coins and tokens. Will, do you know anything about this one?
Nope, I don't. And I would not recommend it because I don't recommend hardly any hardware wallets.
Fair enough. I apologize.
And I know nothing about it. I'm not saying it's bad. I'm not saying it's good. I'm saying that I literally know nothing about the Tangent wallet. Oh my God, these boys are bringing me a feast. I've got a ton of meat. Shout out to the Magnus boys. My goodness, guys, fucking, they're leaving me a fucking feast. You guys are awesome. I fucking love y'all. Shout out to the Magnus boys. Shout out to the Magnus crew. Alrighty, I'll see you in the morning. Street power.
Yeah, man. We'll fight.
Adios.
Fantastic. Alrighty.
Sorry.
MJ coming in here. He says Bitcoin is stained as an Epstein coin now. I understand.
I don't think so.
But at the same time, they've been telling us that crypto is the illicit funds of the dark web used for all kinds of nefarious activities for a long time. And I look back at them and I say, incorrect. That is the US dollar, namely the $20, $50, and $100 bill denominations the most. Fun fact, if you have access to some of those fancy machines that the TSA does or inside your lab where you can do swipes and detect if there are certain substances on them, you would be surprised to see how many dollar bills have cocaine on them. It is higher than you think. All right.
You're welcome.
Up next, Moondog. This is a good one here. I like it. Convenience is a synonym for trust and counterparty risk. That's the shortcuts work like they are supposed to. Well said, sir. Convenience is something else. By the way, Eddie Gastelum, you're coming in here. So I have 1 Nano and 3 Safe 5s. Never use them, but I kind of want to use a Safe 7 because of Bluetooth. Maybe I might be more engaged in it. Hey, if the Bluetooth and the wireless stuff appeals to you, power to you. I'm just letting you know, I'm old school. I try to minimize my crypto, my cybersecurity stuff as much as possible and go single points of failure that I can manage myself. But hey, if you like the Bluetooth stuff, it does sound cool. It has additional upside that you can use for other wallets. Like maybe you want to connect it to your phone or something and use it like that. But that's just not the way I do crypto. So I can't recommend it. But at the same time, if you like it, I like Trezor. I think they put out good stuff. So haven't touched it. All I know about it is what we've shared with you guys on stream tonight. But outside of that, I wouldn't be surprised if they made yet another good product. Moondog coming in here. 4-year cycle happened. We went around the sun 4 times, allegedly. People expected, kind of like World War III, which America already did. Global world on terror, global war. There's an argument to be made there about World War III. I don't know if it's quite the World War argument that people are saying, which is like all the Earth's greatest powers fighting each other in direct opposition. But yeah, global war. Yeah, global war is still going on to this day, effectively.
Yep.
Is it worth sacrificing or just wait for the low after release? That is an excellent question. We'll probably the question. I wish I could give it more time than I can give it right now at the end of the stream. But here's kind of the game theory. Sacrificing. If you get in on the sacrifice, you will be one of the first people with the tokens. Arguably, you should have a pretty good supply as well. The way that crypto releases typically go, if you look at on average why they work the way that they work, how they usually work is that token releases, initial pump, people trying to buy it, quick dump, and then usually you can actually scoop it up for lower than the initial point because a lot of people have tried capturing and tried to capture gains on it. So if you're going for a short-term flip play and you're trying to be aggressive with it, getting in on the sacrifice does have some advantages. If you're just looking to accumulate the token for long-term holds, I think historically the data shows that you will ultimately find a better deal after the token releases and after the initial flash crash. So it depends what you want to do. Are you looking to do a trade to try to make some money so that you can get a bigger bag later on? Sacrifice might be worth it to you. If you are looking to just kind of scoop up the most optimal value, excluding the trading stuff at the beginning, then it sounds like you might want to be waiting for what is most likely going to happen according to all the chart histories that we've looked at, which is that price is probably going to drop below whatever the sacrifice rate was. However, one caveat. If you are a player that is able to get a big enough sacrifice and be high enough on the leaderboard, you will get multiplicative bonus effects or value on what you have sacrificed, meaning that your effective price for said token drops and might even still be lower than what you could accumulate at the lows. But understand, we looked at the numbers. Right now, if you want to be on the top 10 of that leaderboard and get a really big bonus, you got to be sacrificing at least $20,000. And keep in mind, as it stands right now, November 16th, year of our Lord 2025, we still have 16 days to go before the rate increases. So there's still plenty of time for other people to get money in here. That minimum threshold to get in the top 10 will go up, I imagine. I would say it's almost guaranteed because I bet you people are probably working together, getting the boys together, say, hey, we're going to do a collective sacrifice that we could increase our multiplier effect by pooling our money, getting it in there, and then they're going to figure out how to divvy up the tokens among themselves. I believe Fast Abdul actually shouted out a way that there's a way to get in on a collective sacrifice that's done through, I want to say Triplet Dad 007 is also probably doing something like this because they have the great technology for this. So we got to reach out to those guys and ask them for specifics, but pay attention, look at it. There are options out there, but please you got to figure out what is your strategy and what do you want to do with it. If you're going for the short-term trade stuff, yeah, there's decent chance there's going to be some upside potential there. Also understand there's probably a lot of risk involved with it, and it's definitely going to be a timing thing. And odds are it's going to go pretty quick, so you got to be quick on the trigger too. So different strokes for different folks.
I have a spicy take on this, and my answer is yes to both questions. Is it worth sacrificing? Sure. Is it worth waiting for the release? Sure. My answer is the great I have no answer. And I would like to further say that no one has any fucking clue. Is it worth it? Because like we can speculate all we want.
We don't know.
No idea, man. And if I did have an idea, I still wouldn't tell you guys. I mean, I love you, but like if I had insider information that was given to me like under trust of secrecy, I wouldn't share it because like it's important to keep things that people want to keep a secret if you want to maintain those people's respect. So I will say I don't have any insider information, right?
Neither do I.
But like yeah, it's probably worth it to sacrifice. It's also probably not worth it to sacrifice. It's probably worth it to wait, and it's probably also not worth it to wait. it is exactly what you think that it is. So if you've got cash to spare and you're curious and you want to dabble a little bit in the Ricky Corazon, if you want to dabble in some of the speculation behind that man, then yeah, sure, go for it. But there you go. It's my take.
I dig it. Alrighty, on to the next one. Moondog. For some people, Richie is behind it equals it's worth it. For others, a political statement. For some, calculated bets and gambles. For other, the pure thrill of it. That's right, baby. Some people are just in it for the thrill of it.
Yep.
There you go. And by the way, to answer the do we understand Hart's Law? Yes, Boat Guy got it. Video game guy did not get it. Yes, I screwed up, but I did network effect instead of Hart's Law. So apologies to you guys there. But both are pretty cool. Oh, and by the way, Fast Abdul says he uses USD for all of his crimes, allegedly. There's also a caveat, which is he does no crimes. Therefore, if he did do a crime, he'd use USD. But here you go. Your one legal advice. Don't admit to doing crimes. And if you do, don't admit to doing crimes on the internet or on tape or on record. There you go.
Yep.
To MJ, Bitcoin has been an intelligent coin, aka CIA, Mossad, etc., since its inception, FYI, at least highly utilized by it. This is one of the arguments I've heard for, by the way, our good buddy Donovan over at DIY Crypto. He has made this argument, which is that is crypto a potential boon from an investment standpoint? Yes. Is it also intelligence agencies and big government's wet dream of having every transaction ever logged permanently on a blockchain with all of the addresses it ever touches? Yes, it is. So that is why Ricky Corazon and a lot of us here we would love to see a we would love to see a privacy coin out there, but we don't have a good one just yet. Speaking of the devil, Mr. Fast Abdul, how you doing, buddy?
Not bad. How are you?
Doing very well. It's a pleasure to see you. Thanks for joining us, man.
No problem. I was just watching you guys and I was like, wow, this is a good conversation. I'll hear it better in person.
I think that you've been facilitating some really good conversations on X surrounding all of the sacrifice stuff. And I apologize, I'm not up to date on all the latest and greatest that you put out there. I see you have the Vault 369 in the subtitle there. Do you have any hot news that you would like to share with us?
Well, let's start with the sacrifice stuff. I did notice that Buck and Dylan, like the PH team, were running like a pool. So I shared that recently on X. So like in a pool means that people are able to pool together to get a larger like whale bonus, which is kind of a big deal on this sacrifice. It was on all the other sacrifices, like the Pulse and Pulse X ones in particular. I mean, because if you're a little guy, you put in $1,000, big guy puts in $100,000, and he gets 3x more than you. That means his profit line is 3x higher than yours, right? Or lower than yours, rather, where he could sell at a profit or at least at a break even. So that kind of that had a large effect on Pulse and Pulse X on who was in profit and when. I think it's kind of interesting because it was probably the single biggest FUD item on the Pulse and Pulse X sacrifices, right? You guys probably heard that before, right? People get on, talk about Rackham and all this and that. Like the guy was in profit. Like, it's totally understandable. And then Richard went and did it again, except for worse, right? Because with Pulse and Pulse X, it was 2.5x was the max. He's upped it to 3. I can't help but think that this is intentional, right? Like it's not like he didn't hear that FUD. So he probably did it for a specific reason of what he thinks is, for the overall good of the ecosystem. I can't say exactly what that reason is. I have some speculations, but like in order to counter that as like a little guy, it's something to consider very, very strongly. That like if you're going to participate, which I think should be with fresh capital, like don't sell the thing you're holding on to for the past couple years for the new shiny thing, right?
Yeah, it seems like a self-defeating argument.
Yeah, definitely. The new shiny thing is like dubious in some ways, right? Compared to the thing that you understand. And almost no one understands what this thing is really yet. But the option to participate like a whale by joining like the PH guys pooled sacrifice. I think it's something people should consider. The downside is it's a singular downside in that you're losing some control. In that, like, you know, kind of not your keys, not your coins. I've seen people say that in regards to this, but it's a sacrifice anyway, right? Like, you should expect nothing. In this case, you shouldn't expect nothing, and somebody else is holding the nothing for you and speculatively giving you a bonus. In regards to these particular guys, like, I trust them. Like, they're not here to steal money. That's, you know, like, they've done way too much stuff that was way too hard. That would have been really good to just steal money, right? Like, they've had multiple opportunities to just steal the money and they haven't done it. So just like Triplet Dad, I haven't heard if he's running one or not. But like last time, like him and his partner, the MCR369 guys, they had like $80 million or something, and they didn't steal the money. But like, the money could be stolen in a scheme like this. So that's the consideration. That's the downside. Is you're giving your no expectations to someone else to hold, and in return for getting a greater amount of no expectations for yourself. So it's, you know, it's a trade-off. Personally, if I was going to participate, I would look strongly at one of the pooled options, of which right now the only one I can confirm is the one that Buck from the PH team is doing. See my Twitter for a share. Make sure you're in the right place, guys. This is easy, like, scammer stuff that they, you know, put out a fake link and you think you're talking to, you know, Buck from Famous, and you're not. That could be an issue, but it's all there on my profile and links to Buck's profile, Dylan's profile, etc. What do you guys think?
It's a tool. It's a great tool by some people who, like you have said, Fast, they've had tons of opportunities to take like tons of shit from tons of people, and so they have a record, they have a reputation, and like, they've had plenty of opportunity. So
in the case of those guys, it would be hundreds of millions of dollars they could have stolen if that's what they set out for. So they run things that handle liquidity, and it would be literally hundreds of millions of dollars that they've chosen not to steal up to date. Or better still, made it so they couldn't steal it if they wanted to, which is how all good crypto protocols need to be made.
It's true. I mean, we might have a slight bias because we're friends with these guys. We like them. We like the things that they make. But at the same time, I think pointing out the track record and showing exactly what you've said, that these are people that have been trusted with hundreds of millions of dollars before, and they've pulled through every time. So I can't understate it. But when it comes to the overall sacrifice, I think I'm probably in the little guy category, and I also have a different kind of philosophy around this stuff than the average trader. I'm not someone that is looking to try to do a flip trade, especially because I think it's important that we double tap this point. You mentioned it before, which is that the multiplier effect on the sacrifice has been increased to 3x. That means that inversely, if you are the top person that is sacrificed, your cost is 3 times cheaper than the average person. This means that there's a massive incentive for the largest sacrificer to sell before the rest of the competition, aka it's a lot of sell pressure. I talked about it before, which is that the traditional model or graph or chart for how these things work is there's a very big pump initially, a lot of people sell in profit, and then it dumps massively. My strategy around this kind of stuff is I am looking for long-term investment holds. If that's the case, then I think that I, as a small person, a small guy in this big pool, I have the best opportunity to set myself up well after the initial crash and try to scoop up those lows, DCA, and just try to hunt whenever those lows happen and try to build the bag that way instead of try to go through the sacrifice method. So for people out there like me, I would maybe be like, hey, think about it, take it under advisement, understand the size of the game that we're in here, because this is truly kind of like player versus player. You're getting into,
if you're not going to sacrifice, like waiting for the product to launch and buying the dip is like maybe on day 6, something like that, could be like historically could be a pretty good play. Now, there's one thing I want to draw attention to that, like, you know, we come back into the game theory that we think Richard might have that, you know, we have no confirmation of, but like, why would he only accept other tokens? And 0 cores are accepted. So you can't send Pulse Hex Hex from Ethereum, Hex from ETHW, any of the good ones cannot be sent to the sacrifice.
I know this is a bit of a
would you do that?
technicality, but I think it's important to cover it real quick. Theoretically, is it possible to send this stuff on Pulse Chain to said address? I think it is.
Yeah.
Will you get points
But it's
for
a
it?
bad
No.
plan.
It is sending money to nowhere. It is a dead end. It is burning it.
Yet there's no guarantee you get that money back. In fact, he has stated that you would not get the money back. So don't send core tokens whatsoever. There are tokens from Pulse Chain that are accepted, which I'll quote them, but everybody should do their own homework on this. It's USDC, USDT, DAI, all from Ethereum versions, bridged to Pulse Chain, as well as Wrapped Bitcoin and Wrapped Ethereum from Ethereum that have been bridged to Pulse Chain, can be sent from Pulse Chain in form of a sacrifice.
That's fair. I mentioned it earlier on the show, but I would love to get your take on this. What do you think is the reasoning or the rationale or the game theory behind Richard Hart choosing to not allow the core tokens as part of the sacrifice?
Well, think about this. If you wanted to pump the core tokens and perhaps the new token that you received that you're putting out, so the ProveX token, and you wanted to do so without dumping core tokens, right? Like you could sell Pulse into Hex, and then the price of Pulse goes down, the price of Hex goes up, make some people mad, make most people mad, and maybe make the odd person happy. But it's like they all have bonded liquidity. So even when you sell Pulse into Hex, like it doesn't pump it as much as if that was just cash, because Hex and Pulse pull each other up and down because of Hart's law, right? So to have the sacrifice only accept outside tokens, which I believe will probably 100% be sold into things that are extremely liquid on Pulse Chain, like DAI and like ETH that's bridged to Pulse Chain. Like that is the best. If you were looking for a tool to pump the chain, or even just a specific token on the chain, the best way to do so is with outside funds, right? So like stablecoins bridged over, or Ethereum bridged over, because that will pull the price up. It doesn't have it doesn't have the same liquidity pressure as as using a core token, which would, as we just said, would pull the prices down if you did that. So to get outside tokens, sell them into DAI and Ethereum and use those to pump the new thing, the old thing, whatever you wanted to do. That's the tool that he would need to do that. He can't sell Hex to pump Hex. He can't sell Pulse to pump Pulse. And even if you want to pump Hex with Pulse, it's counterproductive. And he obviously understands that. I think that is one of the reasons, and this is 100% speculation. I'm not an insider in any way whatsoever. I don't talk to Richard. But I think that's one of the obvious reasons why he would say no core tokens. And if his goal, and that I'll bring this back to the Richard's been kidnapped by terrorists, because that's very important. But if his goal was to just get the biggest, stupidest number possible that would look insane, right? To get $80 million, $500 million to beat the Pulse X sacrifice, more than $1 billion, then the way to do that would be to accept core tokens, and as well as many other things on the chain, right? And that it would make a bigger number. And if he didn't care about the ecosystem, he could sell those down into stables or whatever he wanted. But it's specifically not what he's doing. Furthermore, it's almost like now this is me very much speaking into what I'm saying, but I think he's saying you can't use your core tokens to sacrifice, hold on to your core tokens. And in fact, he said very recently, he quoted another trader who said their secret to success was not selling things when they were down, right? So I think he's telling us, don't sell your core tokens, dumbasses. You're down. There's no good option for you here. It's very unattractive to sell your core tokens in order to be able to sacrifice. You're innately taking a loss. You're starting at a low position. You've made a loss and you're rolling it in, especially if you weren't in one of those pools, into potentially another loss. You don't know. So I think he's really telling us, don't sell your cores. He wants outside money, not necessarily our money, to go into the sacrifice. And then the future of those funds, I think there's a strong opportunity that they, like the other $750 odd million that's floating in the wind somewhere, could all end up on Pulse Chain at some point in time.
I hear that.
That's really good.
I think the reasoning that you laid out there is sound, which is like, look, the core tokens, odds are you're probably down. If you confirm the loss now and you actually realize it, okay, you've now realized the loss in order to take another risk. It makes sense. And like, believe me, like I haven't done that myself, but I think it's kind of undeniable that if we look at the chart, it is clear that people have rotated at least some of their core coins in order to get in on this sacrifice. And like you mentioned earlier, a lot of the discussion that I've seen on Twitter is that people are kind of not thrilled about that. It's like, oh, there's a new product. Who are the biggest losers? The people that have been holding the core coins. Even though hold the core coins, get in with fresh capital is like the best like possible play. But I think that there's just it's tempting to be like, I already have this money on chain. Why not use some of it instead of just try to unload new capital, which is probably easier said than done because you got to get fresh capital from working the day job, selling, I don't know, something at the house that you're not using anymore, taking out a loan, all kinds of things that are harder than just using the thing in front of you and just be like, I'll just take a little off that. So, I mean, I think that looking at the charts, looking at the action going on, I think it is clear that there are some amount of people that have been doing that kind of thing, even though it seems like a negative EV play.
It's certainly like some people have sold their core tokens to, get like currencies like DAI that they could sacrifice. I'm sure it's happened. I would strongly suspect though, if we were to do enough wallet digging, that we would find that people sold their core tokens because they thought other people were going to sell their core tokens to sacrifice, not to sacrifice themselves. So they see what Richard says. Like if we looked at the price of Pulse, like all the core tokens really right before the sacrifice was announced, like when people are anticipating it, they were up, right? Like previous to the about 5-6 days, like it was looking pretty good compared to shortly before, right? So people were pumped about the concept of sacrificing core tokens, possibly buying more core tokens to sacrifice, and then there was a sell down, right? But I would think the sell down would have been mostly people saying other people are going to sell because they see this and now they know they can't sacrifice the cores, and then they sell down. I don't think it means that people stop believing in the cores or that they sold their cores to sacrifice with DAI or something at a very bad price, which is, the math is just terrible, right? Like it's like, even if you did get the 3x bonus, but you're 3x down from sacrifice, like why would you get on that horse?
Yeah, I think that's an interesting argument you made there, which is like, okay, what if it's not actually the people doing the bad decision and selling cores to do the sacrifice, but what if it's this weird prisoner's dilemma that we set up, which is that if you think that other people are going to do that instead, there is arguably some advantage to sell now in order to buy in lower. Okay, I like that. That's an interesting, I like that.
Yeah,
makes sense.
And traders are going to trade, right? But the fact remains, most traders get wrecked, right? Like 95%. So
true.
It's, not to say that I've never dabbled in stuff like that, but it's like, to actually be good at it, it has to be your job. Like I looked at it enough, I learned about it enough to know that okay, yeah, I could probably do this on a day-to-day, but then it's my job. I do it for 8 hours a day, maybe 16 hours a day some days, where it's like, I'm looking at all the charts, I'm drawing all the lines, you're doing all the stuff. If you're not working at this 16 hours a day, don't sell your undervalued asset on speculation that it may go down further. Not financial advice, but it seems to be common sense that if you're probably going to get wrecked if you try to trade the averages, unless you really, really know what you're doing. Not like casually, I got lucky one time, on a holiday. Don't overestimate your skills and don't underestimate your competition. Because I know some guys who are pro traders on Pulse Chain, and those guys will mess you up.
That's true. One of the little tidbits of wisdom that I've got out of doing book club with Will, and we read those trader books, is that a lot of the guys talk about, if you're going to be a trader, you have to have some kind of edge, whether it's information or your willingness to do, like he said, trade 16 hours a day, make it your new job, your new obsession. Like odds are it's not going to go well.
Probably not. So I don't know. I see my edge on Pulse Chain as information in terms of like when I can put dates on a calendar. And we have some dates on the calendar, right? Like we have the dates you were just talking about. 16 days from now, the sacrifice rate goes down, right? It becomes a worse deal. So to me, if there is sell pressure on the coins, and I think again, this comes back to what people think, because I know if I come up with this idea, I know there's like 1,000 other guys, would-be traders who've had this idea that they're going to be like, pulse chain coins are going to, like, core tokens are going to pump on day 17 from now, right? The day after the sacrifice is no longer a good deal, people will buy back their cores. And so everybody's waiting for the dip on day 16, which may or may not come, because we're all thinking the same thing. And then everybody's going to buy back their coins on day 17. And then I think Richard may also be aware of these concepts. I wouldn't be shocked. And if he was going to do anything with price, I think he would wait until dates like that people understand, people think they're super smart for figuring out. He might wait for them to come and go. That'd probably be something I'd consider.
That makes sense. Out of all the people that are out there that have the time and resources to really dig into this stuff, I think Richard Hart is the top of the list for sitting down and thinking about all the different possible plays, all the different moves. What are people trying to do? What are they trying to think? And then what are the moves he can make around that as well?
Yep. Or just read Richard's Twitter, like really read it. And it's okay if you call it Twitter if you're pushing 50 like me. So it's totally allowed. Like, actually read everything he says for the past 3 weeks, right? And like, to me, it kind of lays out what's going to happen. Like, okay, don't sell your assets for less than you paid for them. Richard said this recently. Richard said he cares about the core tokens, and he thinks he knows what to do with them better than other people. Like things like that. The guy is very much more engaged than we've seen him for the past 3 years at least. And it amazes me. I'm mystified how many people, especially guys who were pretty solid true believers, like, I don't know, 2 weeks ago, and they've just fallen off the horse. I think some of those guys will get back on, and that's fine. And I sympathize with them, but it's like this is very much designed in the way it's set up to be exactly the thing you didn't want to hear, right? New sacrifice, no core tokens, 3x multiplier, right? Like, it's all the things that we were like, okay, yeah, you could do a new sacrifice, I guess. We don't really want you to, but you could, as long as you accept cores and as long as there's no multiplier for whales, right? Like, that would have been what almost any community member would have said. Like, Richard knows this. He understands, like, this is a cause and effect thing. Like, he's allowing some people to get out, and I hate the word shakeout. I hate the term shakeout, and I hate that it's part of crypto, right? And it's not something I ever push with my own tokens. Like, I'm always fighting in the other direction because, honestly, Pulse Chain was mostly down only. So like any of the founders who are launching stuff, you don't have to worry about shakeouts. Like, Richard's kind of got that covered for you. But like, it is part of the math of what could make this great. And I think Richard's looking at a bigger picture, right? Like, it's kind of it's kind of like how a king would look at his kingdom versus like a local mayor would look at his town, right? Like, it's like he's taking care of the entire kingdom, right? So if that means some people have to get shaken out by hearing exactly uncannily exactly what they did not want to hear at exactly the time when they did not want to hear it, right? Because right now, when there's all this talk about like, oh, fourth quarter, like, oh, last chance, blah, blah, blah. Like, it all ties in perfectly to be the exact thing you didn't want to hear, right? So like, I think that's part of what he's doing. And it's not a trick because it's so obvious. It's giving you an opportunity to like say that you can't take it anymore and then to leave, right? Which is sad and not sure I approve. But like, I think it shows the obvious opportunity of you should stay, and that maybe you should participate in the sacrifice or maybe not, but you should not go all in on the sacrifice, right? You should trust in the core tokens, the thing that dance with the one that brought you.
Hey, that's age-old wisdom right there. If you don't mind, I see that you've been doing a lot of good work out on the Twitter. I had a Freudian slip the other episode with Will, and I called it quitter, and then I stuck with it for the rest of the episode. It was funny. But, what are you seeing out on the old Twitters? What's the sentiment that you're getting from the community right now?
Well, it's a mixed bag, right? Of positive people, and there's some like new positive people, like sort of accounts that I don't really recognize that are quite positive, that are stepping up. there also seems to be, and here's a touch of conspiracy theory, but there's a little bit of I think coordinated attack on the Pulse chain on Hex. I'm picking up all these accounts. I got at least 24 of them blocked now that were created October 2025 that say like Pulse, Hex, Inc., whatever, something in their name. Like the guy's name is Inc. Maxi, and he's like, and he made an account in October, and all he does is FUD Richard Hart and Pulse chain. Like it's like, and there's dozens of those, right? These tiny accounts that only FUD Richard Hart that say something in either the account name or in the account description. They're talking about like it's something that would make you think if you just looked at the name on the account, you'd be like, oh, this guy's some sort of Pulse Maxi. But his whole 1 month history, all he does is FUD Richard Hart. So it's like feels like a bit of a coordinated attack, or like some spicy. Maybe the Tang Gang has come back to haunt us. But yeah, if you guys see those, it's freaking welcome. It's lame.
There's even on top of that, I think. Well, are people creating bots, sock puppet accounts, whatever you want to do the fudding? But we have also in the last few months actually seen a decent amount of influx from people that have gotten a little more interested in the Pulse chain ecosystem overall. So it kind of seems like we're seeing two things happen at the same time, which is like more people are getting interested. We have the ProveX sacrifice going on, and then we also see what you're seeing there, which is that an increase in people trying to FUD it. It's like there's a bunch of different narratives going on right now, and I'm just curious to see how it all is ultimately going to play out. But like you said, like before you start believing all the fun that's going on there, do a small search of when was the account created, what history is there. Yeah,
exactly. And like, but there's the other sad thing that I'm seeing is I'm seeing people I recognize, and like they may or may not have a screen presence, and not everybody has to have a screen presence. That's not for everyone. But like accounts that I recognize on X that that are like they were part of the community, and like they've like definitely they've just lost it, right? And that could be like one or two like comments from like just somebody who's airing their mind, which is totally fine, or it could be somebody who's completely raging every day for the past 7 days about how it was all a scam and I give up, but like I'm not going to be quiet about it, which is like, again, is they're right, but it's like it's sad when it's like, okay, that person used to be part of the community and now they're going to end up getting blocked by everybody, right? Like it's like and I give people a grace period, when I see stuff like that, but like it's like, man, it's getting, for some people who were useful have become not useful, and I hope they return to useful someday soon.
That's fair. Tell you what, we actually have a question here from one of our guys. I just want to preface this. We like Beyond All. We've known him for a while, and I imagine that this is given in completely good faith. He says, honest question to Fast Abdul. You have a lot of trust in what would happen if he's completely stepping away from the entire ecosystem and lets the community take over? Is there any coin life after?
Certainly, yeah. No, the Pulse chain would not go away, even if Richard, the worst case scenario you can think of, Richard disappears. I won't speculate how. There's zero pump, there's zero sack bags that flow into Pulse chain. Pulse chain will not disappear. It's a decentralized system run by like tens of thousands of validators, and it will it will persist for decades. Like whether it's the same community 10 or 20 years from now than it is now, that's up for grabs, but it's not going to go to nothing.
That's true. I think a decent point on this one is that if you remember, after the SEC dropped the allegations, back in like August 1st of 2023, I want to say, Richard went radio silent for pretty much like 2 years there. And there was a point where it seemed like it was entirely all up to the community at that point. Like there was a good period there where we were without Richard. And I mean, we survived. There were times of up, there were times of down, there was times of back being up. There was the great P-Hex, E-Hex debate. There was a lot of it. So I think that there's a bit of a track record going on for it. But at the same time, like this is
that going and not come back. Like it would have been much more natural and easy for him than were he to disappear now. Right now he's fully engaged. He's launching new things, people. Like it's not so like the extra, whatever the sacrifice does, the extra, I don't know, like $20 million, $30 million. Like the man's a billionaire. It doesn't matter, right? Like he's not doing it for that reason, in my opinion. So like, yeah, but like bottom line is we're not going anywhere. Like everything built on the Pulse chain would still be here. even like all the Richard Hart tokens definitively would still be here. Hex is immutable code. It's on 4 different chains. It runs on all of them. It just is what it is.
Oh yeah, and I mean, gosh, even the validators, Richard Hart's original validators have been offline for so long. They were only online for a little bit before the rest of the community just really stepped up and took over. And then that's what the network is right now, pretty much, is all the independent validators out there. Whether you're a guy that is hardware or you do one of the group validation things like Black Sheep does with the NFT and the fractional validators over there. So there's lots of options. I think that not having Richard Hart in the ecosystem and having some sort of a hand on the steering wheel it's not great from the marketing standpoint of usually when a founder is involved with the project and the blockchain, it can have very good effects. It can also have bad effects, as we've seen with some other projects where they start getting in fights and they start suing each other and stuff like that. So I think I'm there with you, which is the idea that even if Richard Hart just disappeared, didn't say another word, Pulse Chain would still find a way to exist. I think Moondog also has another interesting idea, which is that there are many people who would love to step in and try to use the network without the fat man present in that way. So yeah, gosh, there's still a lot of projects being built on the chain. We have so many projects already as well. By the way, we did have a question for you specifically, Justin French from your Twitter, which, by the way, good sir, thank you for hopping on, and thanks for putting out the show on your Twitter as well. It's always a pleasure having you. Justin French is asking, is there a vault update?
Yeah, there's some vault updates. So the one that probably most people have no idea what this is. So it's my plan to develop a custom liquidity fork like Liquid Loans, Earn, Flex, ink printer. Might have heard of that one. On Pulse Chain that will take multiple collaterals and is upgradable, meaning more collaterals can be added over time. So I'm looking very closely that the ProveX token, which I suspect is going to launch in January, that could be added as a collateral. If it's a true Richard Hart token, it has the prerequisite liquidity to be a good collateral asset. It could probably be a collateral asset for the Vault 369 protocol within 2 weeks of launch date.
Okay, I like it. And by the way, it looks like Mr. French actually retweeted you on X there. For your own thing there. Look at that. We got meet all the great things about a meme coin. Oh, wait, it's going to have utility. And we have quite the graphic here, good sir. So looks like users
a bit of a trick. I launched it on pump.tires, the token beforehand. So with the concept, and I told nobody, like not even my devs knew I was doing it. I made sure it would work. I talked to the devs if I could put any contract address in. And so instead of doing a launch of a protocol all on the same day, everything all at once, and having a token that's connected to that, I instead launched a token and have developed a meme community around this token who like retweets my stuff and does raids and is pretty awesome actually. And those guys, most of them, I suspect Justin does, but most of them don't understand the utility that is coming. For the token that they're trading and promoting like a meme. So it's been fun actually. Some of the most fun that I've had actually in the last couple of years is launching this meme token that will actually have massive utility, more than any other token ever launched on Pump.Tires. I hope other founders follow my lead with this concept though, because the concept of Pump.Tires tokens, like Launchpad tokens, having huge utility. By default, you get an immutable token that has no flaws, right? It's just a simple token, and it's verifiable where it comes from. Has burnt liquidity against Pulse, and but look, we have a fancy, somewhat confusing flowchart with shiny things that is actually the plan.
I like it. By the way, you are one of the few people that have successfully launched something through Pump.Tires. Granted, there are tons of them, but I'm just saying there are way less of us than there are of you guys. So how was that whole process? How was that experience?
This one was pretty easy because I knew exactly what the plan was, right? And I've played with Pump.Tires before, but this was a more serious endeavor. So in this case, the token went straight to the DEX, right? So it was completely there was no insiders, there was zero humans knew about it. So it in one transaction, the entire bonding amount was purchased and is mostly destined, as per the white paper I've created, to go inside the protocol itself and be distributed over 30 years. So it's pretty locked up, and I knew that would happen. I knew when it was happening, so it was pretty easy to do in just one transaction. Like, bang, this is now live on PulseX with burnt liquidity against Pulse. So it was with that in mind. Now, to the doing it the other way, where you launch something with $10 invested yourself and you want other people to buy it up to get bonded, that's the hit and miss, right? But it's easier now than it will be when Pulse does a 10x, right? Because when Pulse does a 10x, it's going to cost a lot more, right? Like it's going to start costing $20,000, $30,000 to launch something on pumped up tires, whereas right now, the minimum is much lower. It's like, I want to say it's like I put a bit more in with the intent of making it be good. But I think it's less than $10,000, maybe $6,000. You can launch something on pumped up tires.
I dig it. So it sounds like the overall user experience of actually going through the pumped up tires is very user friendly.
It's pretty easy, yeah. Like, you're literally just you put in your ticker name, right? Don't put the $sign in front of it. Pro tip, because that happens later, or your ticker will have a $sign in it, which is not what you want. So you put the ticker name in. You don't get to choose the contract address. You at the time of creation and not after, I believe, you can attach a website, a Twitter account. No links to Telegram on there, I don't believe. And you can upload an image, like a token image, right? So, which doesn't upload it to Dex Screener or anything like that automatically. But while it's on Pumped Up Tires, or when people refer back to previous launches on Pumped Up Tires, you can see it there. And then as the creator, you have an option to make the first purchase, basically. If you max that purchase amount out, like at the absolute maximum amount, that means that it goes straight to the PulseX Dex. Nobody else has an opportunity to buy it on Pumped Up Tires, right? So which eliminates, snipers, dumpage, etc. on the other side. So obviously there's some financial commitment there. I'm working on a longer term thing. Clearly, I'm not too worried about that. But if you only put $100 into it, then other people can. Let's say the limit was $10,000 they had to reach. You only put in 100. Somebody else has to buy it up to 10,000, right? But if you put in 10,000 at the first moment of creation, it skips the part where people are trading it on pumped out tires before it gets pushed to the DEX with burnt liquidity and goes directly to the DEX. So as far as a way to launch a meme coin, if you have the means to buy that out immediately, I'd say it's pretty good. And it gives people immediate faith that this thing has burnt liquidity. It doesn't mean that the founder probably still holds a bunch of tokens that could dump the price if they wanted to, but it can never go to zero, by technical reality. So it gives it more security than a standard meme coin that was created on some sort of launcher, where the founder could hold an infinite amount and the liquidity could be pulled. In this case, the liquidity cannot be pulled. The liquidity is burnt, meaning the LP token, which represents the token that's inside it, have been sent to the PulseX burn address. So they're irretrievable, and nobody can ever pull the liquidity on the initial liquidity, which is much greater than it was when it launched. So far, so good.
It seems like there's definitely some good advantages to launching a token and being the one and only purchase through pumped out tires. Granted, it does mean that if you're launching a token that way, you got to pony up the 10,000 or 20,000 bucks or whatever it is to do it. So, I mean, it's no small chunk of change, especially for maybe the average guy out there that wants to make a funny meme coin. But
I don't recommend it for most people. All right, like being a founder, if you want to be a good founder and you don't want to dump on your community, that means that you're holding that back, right? So it might be like I can look at my wallet some days and as you guys know, I've launched multiple things, right? There's been days where I can look at my wallet and I can see a really big number, right? Now that's a paper number, meaning that I wouldn't be able to achieve that number no matter what I did. But you can't capitalize on that if you want to remain, a figure of note in the community. So it's your exit opportunities are few and far between compared to just an investor who decided to buy your thing on the first day. They typically do better than the founders, that were the good founders at the very least long term, right? Because they bought something, they held it, the thing went up, and then they can sell it whenever they want. That's founders can like, they can sell things, and it's their coins. They can do whatever they want. But like, if they are selling, they should be selling via liquidity or just providing liquidity, making fees on liquidity. Like, those kind of slow gains are what like the good founders live off of, right? It's not off of like dumping the chart.
There's a massive reputational risk to founders selling the tokens that they created. Like, and only a few people can get away with it. Like, even like to this day, everyone gives the Ethereum Foundation a whole bunch of shit for what they do. And it's like, you have to question, is my reputation worth more or less than the dollar value that I can extract from this pool from doing a one-time thing? Am I in it for the long haul, or am I here for like a short-term duration thing? And the reputation is really hard to repair. Like even back to your example earlier when you were talking about folks on Twitter, like they just say one bad thing, and they've been doing fantastic stuff all up until that point. They do one bad thing, they get blocked. They do one bad thing, they get muted. They do one bad, like I'm ruthless with the mute button on Twitter because it doesn't tell the person that I've muted them. But like, all it takes is
stuff, though. That's the trouble.
Yeah. So muting is useful if you just don't want to see the things that they're posting. If you actually want to like stop them from engaging, from interacting, then it's like that's when the block is appropriate. But like it's very easy to do reputational damage to oneself, especially in this world of like crazy finance and like emotionalism and quick snap judgments. And there's a lot of people's like fortunes riding on these sorts of things. So like, it's something that I think that a lot more people should consider and take way more seriously, way more often. I think we would see a lot less negativity on Twitter if people realize that they're not just some sort of anonymous person. If their words actually carry meaning, and when you say something negative on Twitter, whether you intend to or not, if you cause other people to experience bad feeling, then people take that bad feeling experience and they tie it to your identity and stuff. And if you have an identity that's centered around cool people handing you delicious drinks on stream, then that's another thing that gets tied to your reputation as well. So
it's a good brand, I gotta say.
Very good brand.
Being married has its benefits, boys. 20 years this weekend.
Hey, congratulations.
Thank you.
Well done.
Excellent.
Oh, gosh, yeah. Before we went on the old reputation talk there, yeah, you gave the great lesson that I think it's one of the things that I think we let people know. It's like, if you're looking at low market cap coins, looking at market cap can be very entrancing because you see the big number. But then the other thing you got to look at is, what is the liquidity? If it is a very small liquidity pool, guess what? That market cap means nothing. That is the ability to actually transact in that and maintain the price that it is. Because like you said, if you launch the coin and you are the guy with the bag, you might see the big number, but it's not worth that if you try to sell it. Definitely not.
Yep.
Gosh. Excellent. Tell you what, Fast, we really appreciate you coming on, but Will and I have been going for almost 3 hours here. But I will say this. I do want to open the floor up to you. Give us the final word is yours, sir. Talk about the state of Pulse Chain. Final words on the ProveX sacrifice. Tell everybody that the Vault token is the coolest and the best meme coin out there. What would you like to do, sir?
Okay. Well, it's like, as far as Pulse Chain goes and what's going on right now, I think if everybody takes a step back and looks at like the fairly obvious things, like the things that Richard has said lately, the obvious things that seem like they're meant to piss you off, I think the path forward is fairly clear. And to me, that's that core tokens are the priority. The ProveX sacrifice is possibly good, but it wouldn't be something that I would FOMO in everything on, right? It could be an option for some people. I want as many people as possible from outside the community to participate in that sacrifice with their non-Pulse Chain dollars. I think that would be fantastic. I see zero downside. So moderation, people, right? Like don't flake out at the last minute. I do think it is the last minute. I think we're in a minimal timeline here of like 6 months, to 8 months for this cycle, the Pulse Chain pump that hasn't happened yet is going to be in much less time than we've waited so far. So yeah, chill out, take a breath, right? And by all means, maybe try not to flood your own bags publicly. I'm just saying that as an investment tactic, flooding your own bags is not strong. You can try it, not financial advice, but I don't think the results will be excellent.
That's a bold strategy cut. Let's see if it works. Gosh. Tell you what, on our final message of hope here, what are the things that you can point to really let people know that, like, look, you've waited this long, the light at the end of the tunnel, 6 to 8 months away. What are the things that you point to get people hopeful around that?
I think the big things that are obvious is that like the sacrifice money has completely moved into Tornado Cash, which is a mixer that anonymizes it. We can't see it anymore. Richard has drawn much attention to this. He drew attention to the big wallet, made sure everybody looked at the big wallet. He drew attention to the money leaving the wallet. He drew attention to it going into mixers, and continues to draw attention to that. He wants people to understand that this happened, and that he's okay with it. So like that money's floating out there. There's a very strong possibility it could find its way to the chain. Richard has been known to buy his own tokens in the past, and I think he's got about, and it's probably still mostly in ETH, which is probably going to go up, in my opinion, at around $6,000. The sack bags are worth $1 billion. It's kind of enough to 10,000x all the core tokens. So I'm going to wait and see if that happens. If you guys don't want to wait, if you want to get out now at, down 3 times from sack price, that's cool. But I'm going to wait to see if there's a 10,000x. Maybe you should too.
You got to be in the game to win the game. That's for sure. I know I started off this stream doing analysis on Bitcoin and everything going on right now. The Bitcoin fear and greed index went all the way down to 10. The market sentiment is not great. It doesn't seem like there's a whole lot of macro events on the time horizon for the overall markets. And one of the big things that we've seen is people debating whether or not the 4-year cycle is over and it's dead and all that stuff. If it truly is, if the 4-year cycle is alive and we see the end of it, the biggest, weirdest thing is that we didn't see an altcoin season run, meaning stuff like Pulse Chain didn't have that time in the sun, that chance at the 10,000x. But at the same time, I think that personally, there are enough macro things lined up that can really show that 6 to 8 month timeline that you perfectly described lines up with pretty much a lot of the stuff we've been talking about, whether it's the Federal Reserve starting quantitative easing, starting the printing of money. We've had an article with Robert Kiyosaki saying that he's expecting the big print sometime soon. And it's like, these are the kind of things that in the past have really boosted assets, and crypto is one of those things for sure. And when you're in that smaller cap space, which by the numbers, Pulse Chain is, we're not saying it's bad. We're just saying by the numbers, we are a smaller network for sure. But when we do see those times of asset price inflation, the small caps sometimes can win massively, absolutely massively. Yeah. Anyways.
Agreed.
Yeah. Tell you what, sir, thank you so much for joining us. Plug all of your stuff. Where can the folks find you? What do you got going on? Any fun facts? Whatever you want.
Right now, you can check out my new website. So it's vault369.com. It's got a demo of the app there. You may find, if you've played the game Fallout, that the app looks a lot like the Fallout Pip-Boy. Complete coincidence, unrelated. Oh, there it is. If you press that button in the top right there, one that says Open Pip-Boy.
Very nice.
You can actually press the buttons on there. You can go through to different places. You can look at borrowing. You can look at the DAO. You can look at all the different things that this meme token doesn't have right now. Just a meme token.
Very cool.
But it could. It is possible.
Very cool.
I have devs. It's a thing.
True. And by the way, we got to give some personal love to you here, folks. If you want to follow Mr. Fast Abdul himself on Twitter, or X for the new folks, go over and look up Fast Abdul. That is just the tag right there. And it looks like you can get all the latest and greatest when it comes to Pulse Chain, 2Fucks, and the new Vault project. So there you go. Anything else?
I'm running a contest too. If people join my Telegram room, I have about $6,000 in prizes up for grabs. I'm actually surprised how many people haven't jumped on it yet.
Oh, wow. Excellent. There you go. Prizes coming soon. Could be to you. Get in on it.
Link to the Telegram room right on my profile. Don't take it anywhere else because I've already seen scam Telegram rooms. So yeah, just go to my profile, find it directly. Don't take it from anybody else. Scammers are everywhere.
That's true. The tech gets more complicated, but the scams stay relatively low tech, just impersonation, social engineering, all that kind of stuff. Stay vigilant, folks. Excellent. All right, Mr. Will Stevenson, where can the folks find you, and what do you got going on in the near future?
The folks right now can find me in Dallas, Texas for the next probably 8 hours, and then I will be heading up to Kansas to do more tower knocking over in. As far as socials and things, you guys can find all my socials linked from will.pls.fyi. That has everything over there. Regarding what are we doing in the near future, we are live on the Degen Roundtable every Wednesday, Friday, and Sunday starting at 8 p.m. Eastern time. You guys can check us out there. On Wednesday, we talk to people. On Fridays, we cover book club. And on Sunday, we cover the news of the week for crypto, such as we are doing now. Friday, we are covering the book, The Guide to the Most Beautiful Women in the World, the United States of America by Brandon Joe Williams. That's going to be the book that we are covering for book club. And it's a modernized reproduction of a book written in the 1920s, or a training manual and handbook guide for how to be a good citizen and understand the laws of the United States and some things from the 1920s and shit. So very good book, been modernized. There's a lot of old language in there, so kind of look past it, take it with a grain of salt, but it's very good, very fun. That's what I've got going on in the near future. That's where the folks can find me. Zenith, take us away, sir. Where can they find you, and what have you got going on?
Ladies and gentlemen, you can find me over on X and Instagram at zenithdi. But more importantly, if you want to hang out with all of us here, including Fast Abdul, because he's in the community, by the way, and he's an awesome guy in there and helps folks out, go ahead and scan the QR code down under our very special guest himself. That will get you inside of the Telegram. You can see all the latest and greatest from the conversations we have. Good memes, good conversation. And yes, that is where we also post some of the best information around Degen Roundtable.
Telegram like that is the best place to ask for help, guys. So you go to the Degen Roundtable Telegram room, ask for help, and then don't accept help in private. All DMs are scams. All private messages are scams. But if you ask for it in public and people help you in public, then if there is a scammer in the crowd, other people have the opportunity to call them out. Just keep it all public in a place like the Degen Roundtable Telegram room.
Yeah, much appreciated for the endorsement there. But yeah, that's excellent advice too. DMs are scams. If you keep it public, there's the reputational risk associated with it. And I will say, every once in a while, we do have scammers try to hop into the Telegram and try to shill their own stuff, but they are very quickly met with the ban hammer. And we handle those things because we like our community. We want to protect it and make sure it's a great walled garden so we can all help each other out. Hey, if we all work together, we can all win together. And there's plenty of winning to go around. Alrighty. We've done all the good stuff. We'll see you guys back on Wednesday for a Whiskey Wednesday. We'll see you on Friday for Will's book club that he's hosting, and I will be there as well. It's looking forward to it. And then next Sunday, as always, we're going to be back talking about all the latest and greatest with the news. Nothing on the calendar yet, so we're going to have to see what develops. But I imagine we might have some more interesting action in the markets and some interesting news going on. But outside of that, ladies and gentlemen, I want to thank you all for spending your valuable time here with us on the Degen Roundtable. As our very own Agent J often says, we know that time is your most valuable asset, and we appreciate you guys investing it right here with us. Ladies and gentlemen, my name is Zenith, but more importantly, you have been watching the Degen Roundtable. Mr. Producer, that is me. Go ahead and get that trigger finger ready because it's time to remind all the folks at home to remember to Degen responsibly.